If anything, the euro rallying, equities with a lift as we are set to experience more fiscal stimulus from places like Japan. And perhaps we finally get their act together over in Europe too. Here's the market for you. Cross-asset worldwide. Equity futures up by 32 on the S&P 500. We are higher by 1.1% on the S&P. Outside of that, a nice lift in the equity market in Europe and a rally for the euro in the FX market. The dollar weaker, the euro stronger by a third of 1%. 110 is where we're at on euro dollar right now. That's going to hurt for a lot of people who were short the single currency. In the bond market, Treasuries not doing a whole lot this morning. Yields up around about a basis point on a 10-year to 0.71%. That's the price action. Here's the tension in China. Your morning must-read this morning comes from the Financial Times and Martin Wolf. He writes the following: rising friction between China and the United States and the weakening of globalization have been apparent since the global financial crisis, but COVID-19 has accelerated these trends. The pandemic is turning countries inward. It is reasonable to bet that the world which emerges on the other side of the pandemic will be far less cooperative and open than the one that entered it. That's not even controversial anymore, Lisa. That seems to be the consensus view, the view of pretty much everyone we speak to every day on the year ahead, the future, the decade ahead.
Yeah, but I don't understand how that bleeds into markets. We're certainly not seeing the fear trade that we saw a couple years ago with the rising tensions with respect to trade in U.S. and China. But if you get a deglobalization, when do we start talking about inflationary trends that come from just the extra costs of moving things back home? Also, why are these tensions not affecting markets that were roiled before? Why are big tech? Why are some of the microchip stocks? Why are they not responding? I really don't have a good read on this,
Well,
John.
I think we touched on it at the start of the show. Stimulus, the Fed, stimulus, the Fed, stimulus, the Fed. We seem to be ignoring the politics and the tension as the relationship between China and the United States continues to break down. Pleased to say that Enda Curran, our colleague, joins us on the phone now. Enda, fantastic to catch up with you, sir. Just walk me through it. The protests that we see on the streets of Hong Kong today, relative to what they were like several months ago.
Well, there's one key difference this year, John, and that's the fact that the police presence, it's so heavy and highly visible all around central Hong Kong in the core banking districts. So the police are trying to preempt any kind of momentum that the protesters can get. And we saw that today. Today was meant to be a big gathering, but we had a heavy police presence move in overnight. They were outside every subway stop, almost on every street corner. We had clashes in the middle of the city today around lunchtime. There were hundreds of protesters gathered. Some skirmishes with the police, and they made hundreds of arrests over the course of the day. So I think the takeaway from today was the scale of the protest certainly wasn't on a level that we saw last year, for example. But I think none of the underlying tension that's driving all of this has gone away, and that's only set to get worse with the National People's Congress set to approve this new national security law for Hong Kong tomorrow.
And if we take a look at what's going on in Washington in response to this, there's been a conundrum here. How do you punish China for their actions with respect to Hong Kong without hurting Hong Kong and the U.S. more than Beijing? The latest is a range of sanctions. What types of actions would have a real effect, provocative or otherwise, on China that people are looking for from Washington?
No, you are right, Lisa. It is a tricky one for the U.S. by all accounts. The indications are from our own colleagues that they're looking at sanctions against some Chinese officials. At the moment, that's a policy that they've used against China for other matters in the past, too. We know, of course, they also have the option of taking away some of the special trading status that Hong Kong enjoys with the U.S. Hong Kong can import sensitive technologies, for example, and it escapes tariffs, U.S. tariffs. But, of course, the point is that if the U.S. were to take away that those special trade status on Hong Kong, it would double down on some of the pain that the economy is feeling here. Remember, Hong Kong had its worst quarter on record for growth in the first quarter of this year. Unemployment is rising. Confidence in the city remains quite fragile now after a year of both political upheaval and the coronavirus since January. So if we get to a point where the U.S. then turns around and says, we're going to take away the special trading status that we confer in Hong Kong, you'd have to imagine that would be another blow in international confidence in Hong Kong. It's one of the reasons why people are questioning whether or not it can maintain the status that it has as one of the world's great finance hubs.
And it's definitely been something that we've been watching for a while. And one sort of equation here is that Hong Kong provides less of a boost to the Chinese economy than it has in the past. Traditionally, it has been a much bigger proportion. I was reading one statistic that back in 1997, at the time of the handover, Hong Kong accounted for 20% of China's annual economic output. Now it counts for less than 3%. How much of a hit would it be to China if Hong Kong were to lose its special trading status with the U.S.?
Well, you are right, Lisa, that is the case. But of course, let's not forget the role that Hong Kong still plays as a source of capital for China and its companies. Remember, China maintains a closed capital account, and Hong Kong offers the rule of law, a common law system here that the world can do business in, and an open capital account. And we're seeing, by the way, as the tensions with the US increase, that more Chinese companies and big Chinese companies are looking at Hong Kong either for primary or secondary listing. So yes, in the sort of GDP pie, Hong Kong is a much smaller slice than it was in the past. In fact, it's even smaller than Shenzhen now next door. But the point is that Hong Kong is still a critical gateway. It's a source, it's a place where you can do business under the rule of law, and it's a critical gateway for international investors moving capital investment into and out of China. And that's a role that I don't think China can necessarily discard overnight. And it's one of the reasons, in fact, that observers we speak to think that China will have to tread carefully, even if it clamps down on civil liberties in Hong Kong, which it clearly plans to. It will need to tread carefully on the commercial side if it doesn't want to kill that golden goose.
And just to jump back in and wrap things up with you, influencing and changing the behaviour of the Chinese Communist Party has been something that Western governments have been focused on for a long, long time. And I've been spending a lot of time recently trying to understand whether that's something they should even bother focusing on anymore. It's pretty clear that they're not going to be able to change the behaviour of the Chinese Communist Party. And what needs to happen is they need to form alliances so that we can break down into separate spheres of influence, perhaps in Asia and Europe as well. How are you thinking about that situation at the moment?
Well, I think clearly Beijing is digging in when it comes to Hong Kong, Jonathan. I mean, one of the points about the national security law is that it's China's way of enforcing its grip on Hong Kong while also sending a signal to the rest of the world, especially the US, that this is our backyard. And of course, China continues to ratchet up the rhetoric against governments, and this is why we're in this phase of so-called wolf diplomacy, whereby China is going on the offensive. They are digging in. They're making it clear that they're not going to allow any what they describe as foreign meddling into internal business. And let's not forget, at the same time, they're on a soft power offensive globally by sending medical kit around the world. So China's trying to play this both ways, but the simple message to Washington is they're guarding their patch.
And fantastic to catch up with you, sir. Bloomberg's Ender Curran there from New York this morning. Good morning. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
This is a Blood.
Thanks to National Lottery players, South Denbighshire Community Partnership are now delivering hot meals to elderly people in the community like Bob and Sarah.
Thank you.
And £600 million of National Lottery funding is on its way to thousands more local projects across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
The National Lottery. Your numbers make amazing happen.
At Lloyds Bank, we know that money is a concern for a lot of people during this time.
I'm really worried about the business. I'm worrying about you. And I think that's changing me. And I'm worried that somewhere along the line you might not love me anymore.
Oh, that's not true. Whatever's playing on your mind at the moment, Lloyds Bank, in partnership with Mental Health UK, can offer you support and advice. Visit lloydsbank.com/mentalhealth.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio and on Bloomberg TV. Alongside Lisa Abramowitz, I'm Jonathan Ferro. 2 hours away from the opening bell in New York. Here's your price action. S&P 500 futures up by more than 1%. We advanced by 34 points. In the bond market, you don't see the big move lower in treasuries in a way you might expect, with the risk appetite improving more broadly. Yields are up just 2 basis points on a 10-year to 0.72%. But this move in FX gets my attention, not just the Chinese currency, but over the last 10 days, euro dollar from 108 to 110, we moved 2 figures as Lisa just slowly, Europe making all the right noises about putting a package together. But I have to stress, still, we don't have the whole of the continent on board with what people are talking about. And unfortunately, that's critical.
Yeah, although the idea that they propose, that the European Union's governing board is proposing a bigger than expected package, is definitely getting people's attention and giving more strength to the euro versus the dollar. I am wondering also about the ECB saying that they're going to increase their bond purchases. Again, you were talking about the lack of a move in yields in response to this risk on feel. Is this market even a market anymore, given the fact that central banks basically own it?
Well, I think it's fair to say that some of these bond markets are no longer markets anymore, and I usually beat up on the JGB market, and let's be clear, that's not really a market at all because of how much the BOJ actually owns, Lisa. I'd also make the point that some of those securities in Japan hardly trade anymore. But on the European package, I find it really interesting. So they're throwing around bigger numbers, but even when we had a smaller number, the Netherlands and Austria weren't behind the plan. So you telling me it's more encouraging because the plan is bigger? I'd be more encouraged if everyone got on board with the plan when it was smaller, and then I'd believe that it could be bigger in the first place. At the moment, I see the same discussion continuing. A bigger plan, okay, sounds good, but I want to see everyone on board with a simple plan to do something at the European level.
Yeah, although the conversations have been going on, right? The frugal four, the ones that actually contribute more than they get back from the European Union, yes, pushing back. But they have been in conversations all along the way. And analysts have been talking about how if there were some real pushback issues that they had, some of that would be incorporated at this point. So those discussions have been going on. But you're right, this isn't a done deal. And you do wonder what kind of downside risk there is if this doesn't come together.
I've been crossing my fingers for the best part of a decade, hoping that Europe would finally get it together, and still we move slowly. I get it, things have shifted a bit, the Germans are on board, but let's hope we can actually make it over the finish line this time around. To talk about the bond market, let's bring in a good friend of this program, Kathy Jones of Charles Schwab. Kathy, fantastic to have you with us. I've been thinking about what I know you've been thinking about. What would create the most amount of pain in this market for the most amount of people? Inflation. How underpriced is inflation coming out of this as we reopen, Kathy?
Oh, it's really underpriced. And, let me be clear. We're not looking for a lot of inflation. We have to get through the deflation before we get to worrying about the inflation. But when you look at the way the market's priced right now, there's no expectation built into the bond market of inflation. And so it's a huge concern that keeps coming up with our clients, even though we think it's a couple of years down the road if it's out there at all.
Just seems to be some confidence much more so about the front end of any yield curve at the moment, Kathy, and for good reason as well. It's really anchored. Central banks are just going to sit there for a long, long time. Seems to be a lot more uncertainty about the longer end, how the 10-year and out responds to any pickup in inflation. Kathy, what are your thoughts on that at the moment, particularly specifically here in the Treasury market?
Yeah, I think that there is the expectation that a worst-case scenario, the Fed goes to yield curve control, and that keeps the short to intermediate term at least anchored, and that they would take whatever moves they would need to take in order to anchor the long end of the curve as well, as much as they did in that post-World War II era. But I do think that, for people who are worried about inflation, or at this point, the cheapest way to hedge it is probably tips. There's almost no yield. In some cases, they have negative yields. But in terms of hedging tail risk, tips are a very efficient way to do that. And we do see people kind of barbelling their portfolio. So they're buying kind of short-term credit and long-term tips as a way to play both ends of the spectrum.
I'm struggling to understand, though, where the inflation would come from. People talking about how money printing in the past hasn't led to inflation. Certainly, we didn't see it after 2008. I do wonder, though, whether the trade issues and the deglobalization that we were talking about earlier in the program will lead to inflation. The idea that overseas production was cheaper, you bring it back on shore, it gets more expensive. How much is that driving the sort of barbell idea that you have?
There's quite a bit of thought about that. I'm a little bit skeptical that companies are really going to reshore that much, because it's still going to be a big leap in terms of their costs, and can they really pass those costs on to consumers and not just hurt their margins. So I could see that you'll see some movement of concentration out of China, as we've already seen, but a lot of it is still going to places that the labor costs are cheaper, and you still have sort of this access to global supply chains, say Latin America, obviously the rest of Southeast Asia. So, if it's going to happen, if deglobalization is going to happen, I think it's a long-term process, just as globalization was. So we're just not seeing the kind of inputs to inflation that I think will produce it in the next year or two, or probably even 3. But at some point down the road, there's always a possibility it could materialize. And I frankly think central banks would welcome it, right? They'd be very tolerant of an overshoot on inflation at this stage of the game.
Well, that's the point, isn't it, Kathy? They'd be tolerant of it. Let's talk about their reaction function. How they would respond to any of this. Do you think they'd respond at all?
Not initially. If you think that, say, for the Fed, they've undershot their inflation target for I don't know how many years now. We've heard from Powell that, the emphasis on this is a symmetric target at 2% on the core PCE, or really whatever measure you want to use. And so I think they would be quite tolerant because I think the central banks believe inflation's a problem they can solve. They've done this in the past. They know what it takes. And so this is not their big concern. The deflation is the bigger concern. So I think they would let it run for a bit, as long as it was a mild acceleration and not a runaway acceleration.
Let's talk about another problem that the Federal Reserve and other central banks can't solve, or perhaps have been unwilling to solve, and that's bankruptcy. And John and I were talking about this earlier, this idea that is there any discomfort emerging from FOMC members, given the fact that we're seeing a rally in the riskiest debt this month, which is actually outperforming safer notes, as investors get more complacent that they'll be backstopped by the Fed and fiscal stimulus? I'm wondering how much that disconnect has led to elevated prices. In other words, how much pain are people going to feel who are buying CCC bonds right now?
Yeah, it's been quite remarkable to me how people have sort of piled in because of the perception that the Fed is going to buy the whole high-yield bond market. I mean, if you listen to what they said and look at the term sheet, they're not buying the entire market. I can see that spreads were so elevated that they needed to come down. I think that makes sense. Just the provision of liquidity helped that. But they've been very specific about buying some fallen angels, a small amount, a limited amount of ETFs. But, people are trained now. I think they're just conditioned now. If the Fed is buying it, they're buying it. And the perception is that the Fed is supporting the high-yield market, broadly speaking. And a lot of people have run in. If you look at the assets under management and some of the bigger ETFs, they've jumped 20-30% in the last couple of weeks. So clearly a lot of people are chasing the trade.
Yeah, it's been shocking to me. I've been watching HYG, the BlackRock high-yield bond ETF, that's seen nearly $2 billion of inflows over the past week, more than $5 billion so far year to date. I'm just wondering, are you selling this? Are you basically saying, we're out, we're done, we think you guys are overpricing the Fed put, and right now we just want to hide out in investment grade and treasuries?
Well, we definitely prefer investment grade, and at the shorter end, 1 to 5 years, which is what the Fed is buying. On the high yield, we're neutral, but we're being really cautious because a lot of these companies won't qualify for the Fed's program. We do look for defaults to pick up, maybe as high as 10% in the speculative defaults, and we think recovery rates are going to be low. So particularly with, the triple Cs and the very low-rated bonds, we would definitely be out of that.
Melissa, this is the pain trade, isn't it? And we saw it play out in Europe over the last 10 years. Once the central bank gets involved in an asset class, it's totally divorced from fundamentals. You can get spreads grinding tighter, even as the economy hardly picks up. We saw that over the last 10 years. And I do wonder, Lisa, whether that is the playbook this time around, or whether things are somewhat different.
You can't have Fed money preventing bankruptcies. There's only so long that asset prices can remain elevated at a time when these companies are getting no revenues. That's what I'm struggling with. And the idea that some of these companies are putting up islands and cruise ships in order to raise more money and stay alive. At a certain point, the time runs out, which I guess, Kathy, that's my question. What's sort of the tipping point at which these companies become insolvent and no amount of Fed backstop can help them?
Yeah, I think it's coming. I think it will probably materialize later this year. We're not seeing the revenue pickup that a lot of these companies need. A lot have been living on rolling over short-term debt in the bank loan market, and that market has deteriorated pretty quickly. So I think it's coming later this year for the really low-rated credits. This has been the initial kind of euphoric move of recovery off of spreads at 1,100. Over treasuries, and now they've come down to something that's closer to realistic, I guess, given the backdrop. But even if the whole country opens up, and even if we start to see recovery, I think some of those companies just can't make it. Their debts are too high. They're not going to recover to profitability anytime soon, and I think their leverage ratios just got too out of control. So I think it's coming probably late this year.
Kathy Jones will continue the conversation, no doubt. Kathy from Charles Schwab. Lisa, that is the issue. We've talked about it so many times. The focus on liquidity over the last couple of months is going to switch to solvency pretty quickly, and arguably, Lisa, already happening.
Yeah, and even though we're seeing bankruptcies not getting priced into the degree, we had seen that bifurcation, but it's starting to shrink, John.
Equity futures this morning with a lift up 33 on the S&P 500. We advanced by 1.1% as we count you down to the opening bell in New York City. Next up on this program, on reopening, the mayor of Boston, Marty Walsh, coming up. This is Bloomberg.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Thank you, Lisa. John, President Donald Trump plans to travel to Florida to watch today's SpaceX's manned test mission to the International Space Station. The launch will mark the first time NASA astronauts have blasted off from U.S. soil in 9 years. Astronaut Bob Behnken, one of the mission's crew members, is looking forward to the launch.
I think continuing to push into space challenges us as Americans, challenges us as scientists and engineers, and I think that continued push is important.
The other astronaut, Doug Hurley, says it is an honor to be part of it. Congress is shifting its attention to a more modest overhaul of small business coronavirus aid. Although it remains deadlocked on a larger relief bill, the House this week is expected to pass legislation that would give small employers more time to take advantage of federal subsidies for payroll and other costs. The Senate is considering a similar measure. President Trump touted his measures for handling the coronavirus aid. And the pandemic, the president told reporters in the Rose Garden that the travel restrictions his administration put in on China worked to stem the rate of infection.
If we didn't act quickly and smartly, we would have had, in my opinion and in the opinion of others, anywhere from 10 to 20 and maybe even 25 times the number of deaths.
About 100,000 Americans have died from COVID-19. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg. With the Bloomberg Business of Sports Report, I'm Michael Barr. McLaren plans to cut about 1,200 jobs to help counter the financial impact of the coronavirus pandemic. In a statement, the British supercar maker says the layoffs will impact the applied technologies, automotive and racing businesses, as well as support and back office functions. McLaren says the temporary closure of factories and showrooms, as well as the cancellation of motorsport events, abruptly cut off valuable revenue streams. Having already trimmed costs across the group, management is having to dig deeper for additional savings. Chairman Paul Walsh says we now have no other choice but to reduce the size of our workforce. Liverpool announced they will be contacting season ticket holders over the next 14 days to ensure they are refunded for the club's remaining 4 Premier League games. According to The Telegraph, Liverpool will lose an estimated £12.9 million in ticket sales this season. With the Bloomberg Business of Sports Report, I'm Michael Barr.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global News 24 hours a day.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
TfL has a plan to help London reopen. You can do your bit by working from home if you can. Avoid public transport and walk or cycle wherever possible. We're increasing the number of buses, trains and tubes we run, but they may still be busy during peak hours. If you must use public transport, avoid early mornings between 5:45 and 8:15 and evenings between 4 and 5:30. This will help those who must travel at this time to do so safely. Search TfL Restart Plan. To the Mayor of London and TfL, every journey matters.
I will override any governor that wants to play games. If they want to play games, that's okay, but we will win. And we have many different ways where I can override them. And if I have to, I'll do that.
The President of the United States weighing in on reopening places of worship. Unclear whether he has the power to do just that. But you heard the man. Certainly some tension between the President and the reopening process in various states. In your market this morning, we continue where we left off yesterday. We had some weight to the S&P 500, up by around about 31 points on the S&P. We advanced by a little more than 1%. In the bond market, Treasuries relatively unchanged, just a little bit softer, lower. Yields higher by 3 basis points on a 10-year to 0.73%. And in foreign exchange, A stronger euro gets my attention. Euro dollar positive by around about 1/3 of 1%. From New York City this morning, good morning to you all. Alongside Lisa Brabitz, I'm Jonathan Ferro. And Lisa, just a lot of optimism over the last couple of days relative to where we were several weeks ago about how quickly we can reopen. But not only that, how quickly we can get back to normal.
Yeah, if you look at the pictures over the weekend, the pandemic's over, John. That's apparent from the Lake of Ozarks, apparently, as everybody gathers in and crowds pools. My question is, are we going to see a second wave of infection in 2 weeks that will reverse what we've seen, or is this going to give fuel to people who think that perhaps some of the shutdowns have been overdone, giving more of a lift to equity markets? A big question mark, and ultimately it will be one of the determining factors of what's to come this summer.
Let's have that conversation on reopening, the conversation of the morning on that very topic. I'm pleased to say that the 54th Mayor of Boston joins us now, Mayor Marty Walsh. Mr. Mayor, fantastic to have you with us on the programme. I'd love to get your thoughts on this. There is so much discussion at the federal level, how quickly we should open up. At the state level, can you talk to us about the city level, why Boston needs to go at its own pace?
First of all, thank you for having me this morning. Secondly, I think that Boston's a very densely populated city. We're about 700,000 people in about 47 square miles. Every day, when we're in normal circumstances, our city doubles in size with people coming in to go to work here in Boston. And during college season, we had another 150 to 200,000 college students in our city, graduate students that are learning here in the city of Boston. So what I want to make sure is as we reopen, we get it right. I'm concerned about a second surge. And I don't think that our economy necessarily can handle a second surge and a complete shutdown. So I think it's very important that as we reopen, whether it's office buildings or manufacturing or whatever it might be, that we do it in a very thoughtful, methodical approach, so that we don't have to, in the event of a second surge, shut down again.
Mayor Walsh, just in terms of the education system, and you've touched on that, let's expand on it. What's the city prepared for, just in terms of how quickly we can get the schools reopened?
Well, the colleges and universities are having conversations now. Some of them have already made statements that they'll be back in August, and I hope they are. They're talking about doing massive testing and tracing, and also potential self-isolation if somebody tests positive. It's a big part of our economy here in the city of Boston. It's a large employer, and these college students that come in spend a lot of money in our city. They eat in our restaurants. They shop in our stores. So it would be great to see schools open, but the way that's really important for me anyway as mayor is to make sure that they're healthy as well. I mean, this isn't healthcare versus the economy. This all has to be together. Public health is vitally important right now as we move forward. Nearly over 300,000 people have lost their life. 300,000 people lost life in the world, 100,000 in the United States of America. And quite honestly, if we didn't take all the precautions that we did over the last 3 months, that number would be far greater. In Massachusetts, we're the 4th highest state for the number of cases and the 3rd highest state for deaths. And that's not where you want to be. And it's important that we continue to take this serious. And now's not the time to let our guard down.
Mr. Mayor, I'm wondering whether reopening plans can be determined locally, city by city, or whether in order to be effective, they really have to be federally coordinated.
I don't think they have to be federally coordinated. I think they have to be state coordinated, and I think they have to be almost in Massachusetts. We usually go by cities and towns, but if you can do it by county, in Massachusetts, 2 of the highest counties that have the highest number of cases are Middlesex County and Suffolk County. We're in Suffolk County, Middlesex is next door. If there's an opportunity for us to look at kind of the approach that New York was looking at, letting some counties open up, easing restrictions, you have rural and suburban areas. So it really is important to think about, be thoughtful when you think about reopening. You can't just blanketly reopen across the country. Massachusetts, Michigan, New York, New Jersey, the highest states. What we're dealing with, the challenges in our states are a lot different than Wyoming, North Dakota, South Dakota, and maybe Louisville. So Kentucky, I should say. So I don't think it can be a state by state. It has to be. It can't be by the country, I should say. It has to be state by state. And we're also sharing best practices. So what I watch is going on in Seattle, I watch what's going on in LA, in New York, in Houston, and Austin, places like that, in Chicago, and I make decisions. Sometimes my decisions are based on what they're doing or where they are in the surge. If we're ahead of them, they follow us and we follow them. It's about sharing best practices.
Mr. Mayor, based on your experience with the virology here, I'm wondering whether you think that the data backs up the reopening enthusiasm that we saw across the country over the weekend.
I think that the data backs up the reopening if we follow it. I think it's not being followed consistently across the country. I think that, the data shows that we don't have 14-day declines and people are feeling the pressure to reopen. And I appreciate that. I'm an elected official. I've been mayor of Boston for 7 years. And I can feel the pressure sometimes, but it's not about the pressure. It's about doing the right thing. There's no difference between reopening and shutting down. When you make a decision to shut down a city, which not many people have had to do in the last 100 years, quite honestly, they're difficult decisions. As we think about reopening, all of the work that was done over the last 3 months, whether it's in Boston or in the Ozarks, how do you can't just let that go by just reopening because people want to be out in the sun. It's not the safe way to do it. Because the data will show us again if there's a second surge, if that surge could be worse than the first one. And that's where the problems will come into play.
Mayor Walsh, just in the 45 seconds we have left with you, I think it's important to touch on austerity. The good news is that the budget was in good shape in Boston coming into this particular crisis. Coming out of it, there's a real fear about state and city level austerity. Could you set expectations for us appropriately?
I mean, I think we've had 7 years of incredible growth in the city of Boston. And this coming year, what we're going to do is preserve the important pieces of the budget. We're going to be making investments in education, investments in housing, but we still have to have a balanced, responsible budget. So there will be cuts across the board in the city of Boston. Our final budget will be voted on sometime in the next 3 weeks here. And we're working right now with our Boston City Council to come up with the final product. So it won't be as rosy a budget as last year was, but hopefully we get out of this safely, and next year we're going back to prosperity again.
Marty, I hope this is a conversation we can continue. I look forward to doing that with you over the next several months on this particular topic, because I think it's a really important conversation. Boston's mayor there, Marty Walsh, on reopening in Boston. In your market right now, as we count you down to the opening bell, we're in good shape here, up 30 points on the S&P 500. We advanced by more than 1%, a similar mood to yesterday, a real cyclical tilt to some of the price action in the last 24 hours. In the bond market, yields bleeding just a little bit higher, a stronger euro in the mix too. From New York City up next, Laurie Calvasina of RBC Capital Markets on this equity market. From New York, this is Bloomberg.
Not completing high school.
TfL has a plan to help London reopen. You can do your bit by working from home if you can. Avoid public transport and walk or cycle wherever possible. We're increasing the number of buses, trains and tubes we run, but they may still be busy during peak hours. If you must use public transport, avoid early mornings between 5:45 and 8:15 and evenings between 4 and 5:30. This will help those who must travel at this time to do so safely. Search TfL Restart Plan. To the Mayor of London and TfL, every journey matters.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I went high school here in New York
Find these and more NBA podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Users in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
I just don't think it's credible to believe that a long-term solution to the problems we're facing can be achieved by moving interest rates.
Economic forecasts are hazardous at best. They're even more so now.
The uncertainty associated with the pandemic is not likely to go away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Alongside Lisa Abramowitz, I'm Jonathan Ferro with Tom Keene out today. Your equity market rallying 30 points on the S&P 500. Lisa, there aren't many things that write a better story than a market that's ripping over the last couple of days. Price action really shaping the narrative in a big way.
Yeah, but you said it before. Fiscal support, more fiscal support, lower rates. I mean, this is what's driving it. And I just have to wonder at what point fundamentals catch up, because we're not seeing the economic data to justify this. And yet people are looking forward to data they're expecting as we see a reopening start to take hold.
Well, quite clearly, Lisa, what we're going to see in the next few months is just inevitable. It's common sense. An economy that goes from shutdown to reopening, you'll get that month-on-month sequential improvement. Things will look better. July will look better than June. August will look better than July if we can carry on reopening. That's part one. Part two is the limits of the recovery, the limits of normalization, how dependent we are on a vaccine, on improvements on the science side to really adjust the limits of that normalization. And I think at the moment we're focused on the short term, just the sequential improvement. At some point you've got to get your hands around the longer term, how quickly we can normalize.
Well, also, people are talking about a vaccine, and yet I don't hear that much being made of the Merck executives yesterday who came out and said, it has never been done on this timeline before. We cannot commit to this 12 to 18-month time frame, and we did not sign on to President Trump's pledge for a warp speed of this vaccine. You have to make sure it can get out to the entire world in enough bulk to create some sort of herd immunity, and you have to make sure it's safe. So at what point is the reality of the science going to catch up? I mean, there's a lot of hope baked in here, John.
And there's a ton of hope, Lisa, and I think there's nothing like an equity market to put rose-tinted glasses on equity analysts to start seeing the world in a different way, in a better way. Hope about the stimulus, hope about the science. Look, we all share that hope. We all want to live in a better world, and this equity market is just encouraging that hope at the moment, up 30 points on equity futures. Laurie Cavacina of RBC Capital Markets joining us now. Laurie, you've been far more conservative than most as we've rallied and ripped off the lows. You were looking for another drawdown, and all this market has done is shoot higher. What are your thoughts now, Laurie?
So, look, I would say nothing has really changed in our view, John, which is we're not trying to play the day-to-day trades. We're really trying to think about where we're going to end up on December 31st. And to us, there's enough valuation froth back in this market. The rally is very news flow driven. It's very fragile, in our opinion. We think you're going to see choppy waters from now through year end. So, I would say that the tape is tempting to chase, but it's not one that we think we should be chasing right now in terms of getting more bullish.
So let's talk about some of the places where the tape has gained. The Russell 2000 small and mid caps seeing their best performance so far this month versus the S&P in 2 years. I'm wondering whether that has run too far in your view, or whether this is just catch up given how much it's lagged behind.
I think it's the latter, Lisa, and you'll recall that I used to be a focused small cap strategist, and back during the QE era, I was exclusively focused on small caps. So when I hear people talking about how the market's not really matching fundamentals, I say, well, that's exactly what we heard about small cap in the QE era, and they ripped. And what's really interesting to me is that even though this is a Fed liquidity-driven rally that we've seen since late March, the small caps haven't really ripped. And if you just go to your Bloomberg terminal, look at the Russell 2000 against either the NASDAQ or the S&P 500 and just take it back a bit. Don't just look at the past few days. Look at the past few months. It's really been more range-bound than a breakout. And we've had a couple of these little melt-ups like we've had the last few days where it's felt like they're taking off and it peters out. So the price action underneath the surface is actually still telling me that while, the market's in very risk-on mode the last couple of days, it hasn't really been there throughout this rally. The market is still somewhat indecisive if you look at the leadership under the surface.
So if you take a look at the Russell 2000 so far, are you saying that you would consider going into certain areas of these small and mid-sized companies?
Yeah, so we actually, the last big small cap piece we did last month, we said, look, we'd be market weight, sort of the small caps relative to large caps, we'd be neutral. And we thought very much that it would just sort of be dependent upon the trajectory of the economic data, whether or not that trade could be sustained. I think you brought up a great point on normalization. And frankly, as I've talked to investors the last 6 weeks or so, there's a lot of doubts about whether or not we're going to be back to normal anytime soon. That's a limiting factor on small cap performance. That being said, if you think that we have seen the worst of the economic data in 2Q, and as John mentioned, sequentially it starts to get a little bit better than here, you don't want to be underweight either. So we think sort of keeping a balance between your small caps and your large caps makes sense at this point.
Laurie, the problem that a lot of people have got right now is not the fear of missing out, it's the realization of missing out. The NASDAQ has basically filled the gap. The Russell, yes, hasn't filled the gap, but it's still 40% off the March lows. What do you say to those people that have missed out on the rip, Laurie?
Well, look, I think one of the things people are struggling with on the rip is that the rip is really driven by a lot of stuff that people that you and I talk to, John, the institutional community, don't really like to buy. So when we look back at prior recession recovery periods, it's highly shorted names. You talked about the airlines earlier. It's stuff like that, the really, really distressed parts of the market that tend to work in these recovery trades. It's low-quality companies by any measure, though, that you can pick. And I think the frustration I sense from talking to investors, it's not just that the market's ripping and they might not be there. A lot of people I talk to, they did try to get positioned for a recovery, but it's just not the kind of stuff that they want to be in long term that's doing well right now. And that creates an additional layer of frustration.
You're making the argument to stay overweight consumer staples. Can you tell us why, Laurie?
Well, we're actually neutral consumer staples. We like it better than consumer discretionary, which we're underweight. Our overweights right now, we're overweight utilities, industrials, and healthcare. And generally, I mentioned the concept of balance in small versus large. We also really want to be balanced in terms of our sector exposure right now. So utilities is our favorite defensive, industrials is our favorite cyclical rebound play, and then healthcare is our favorite longer-term growth play. I will tell you that with staples, we actually think the sector looks quite cheap again. If you look at it against next year's earnings, which we think are too high for the broader market, but we think are actually pretty reasonable for consumer staple companies. Consumer staples has also been, just sort of a part of the market that's been so deeply hated. That's usually, when it's as hated as it's been, it's usually a very good 3 and 5 year forward outperformance signal. So we don't think people should be underweight consumer staples at this point. If you're going to play the consumer, we think it's the better way to go than the discretionary stocks.
We're speaking with Lori Calvasina, head of U.S. equity strategy over at RBC Capital Management, and Capital Markets. And I always love speaking with Lori, not only because she's really smart, but because she's also experimenting with this homeschool situation, which has led to a questionable productivity, I will just say, of all parents out there. I am wondering, Lori, John's done a really good job highlighting how people are moving into the cyclical stocks of financials and energy, seeing a real gain recently. I'm wondering how far this rally can go if we don't see the momentum continue in the Amazons and the Netflix. This is a question raised by Julian Emanuel of BTIG. What's your thought?
Well, look, I think it is a limiting factor to some extent. These are the biggest weights in the market, and you do need them to go up if we're going to see the market continue to climb higher. And if they don't, you really have to see a lot of the other big sectors, the big weights in the market, do a lot of the heavy lifting. And because of the disproportionate market cap share of some of those big tech companies, these sort of other areas like financials are just going to have to work even harder. And I'll tell you, I've watched the financials. It's another trade. It's only taken off recently. This has not been in melt-up mode since March 23rd. I really question the outperformance ability of financials on a longer-term basis if rates are going to stay low for a long time. We really do need to see 10-year yields move up for that sector to outperform traditionally. And that's, I'm an equity market strategist. I'm not a bond market person, but I really have some doubts there that this is a longer-term outperformance trade. It feels like a short-term move off the bottom to me.
Laura, you're an equity market strategist that spends a lot of time thinking about positioning. So talk to us about positioning. And with that in mind, whether the path of least resistance right now for some of these names in financials is higher, just in terms of the positioning. They're so under-owned.
What's interesting on positioning, we spend a lot of time looking at the hedge fund positioning because they're some of the most important traders and just sort of dictators of price action in the market today. The financials have been a deep and chronic underweight for hedge funds for a very, very long time. It's like sort of post-financial crisis. We just saw a lot of hedge funds that decided they're not going to play there, and they decided to play in the fintech companies, which are really sitting in IT services as opposed to playing in the banks. And, there's a pressure point for hedge funds if we do get a real long, true outperformance trade in financials. They are going to be underexposed. It is going to hurt them. It has the potential to sort of drive them back into that sector and drive the prices up substantially. But I've been saying the same thing for like 3 or 4 years, and it hasn't happened. All we ever really tend to see in this financial sector are short-term trades driven by value investors and long-only investors. They get to a certain level, and then that peters out, and the hedge funds never pick up the baton. So the potential is certainly there, but the willingness, I'm not sure is.
Lori Calvasina of RBC Capital, always fantastic to get your thoughts, Lori. Send my best to the family, send our best to the whole family, and thank them for letting us borrow you for a couple of minutes this morning. Lisa, this is the issue for financials, isn't it? I think it is the number one issue, and Lori's nailed it. What happens with rates? And how low will we remain exactly where we are with rates at the moment, 0.1, 0.2? If the Fed's going to go through with yield curve control, does that mean they try and flatten the whole curve, or do they appreciate some of the benefits that comes with a much steeper curve? Anchor the front end, let the long end drift higher. I think the answers to those questions will hold a lot of the secret sauce as to what is about to happen with the financials in the months to come.
Yeah, I was actually looking this morning at the gap between 2-year and 10-year U.S. Treasury yields, and it's hanging in there at about 50 basis points, and it's been pretty stable. Not that surprisingly, given the fact that we're talking about yield curve control. There's also a question of credit losses, and J.P. Morgan's Jamie Dimon raised this yesterday when he said that possibly they could see a faster recovery than some people had expected, leading to lower credit losses. A big wild card that people really aren't talking about as much as we head toward reopening, John.
What was the Jamie Dimon line? The Fed didn't get out of the bazooka. It deployed the whole military. That's kind of what it felt like over the last couple of months. In your market right now, equity futures higher by 31 points on the S&P 500. We are positive by a little more than 1%. Next up on the program, we'll head down to Washington, D.C. to catch up with our colleague on the latest in Congress and their next move as they look to Hong Kong. From New York, this is Bloomberg.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Lisa, John, thank you very much. Only about half of Americans say they would get a COVID-19 vaccine if the scientists working furiously to create one succeed. Another 31% simply aren't sure, while 1 in 5 say they'd refuse. That's according to a survey from the Associated Press and ORC Center for Public Affairs Research. Dr. Francis Collins, director of the National Institutes of Health, wants people to know that safety is not going to be compromised for speed with any potential vaccine.
I would not want people to think that we're cutting corners, because that would be a big mistake. I think this is an effort to try to achieve efficiencies, but not to sacrifice rigor.
Worldwide, about a dozen vaccine candidates are in early stages of testing in people or poised to begin. South Korea has reported its highest number of new coronavirus infections in weeks. India reported another record single-day jump of more than 6,000 cases. 4 Minneapolis police officers who were involved in the arrest of a black man who died in police custody were fired yesterday. It comes a day after a bystander's video showed the man pleading that he could not breathe as a white officer knelt on his neck and kept his knee there for several minutes after the man stopped moving. Philanese Floyd is the brother of the man who died.
They could have tased him. They could have maced him. Instead, they put their knee in his neck and just sat on him and didn't carry it on.
Protests were held in Minneapolis yesterday over George Floyd's death. Live from the Bloomberg Interactive Brokers Studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Influential conversations from Bloomberg Television.
Right now, we're all depending on the digital world that little bit more. And Barclays Digital Eagles are here to help everyone develop the skills they need. From T&Teach, supporting those who are new online, to Code Playground, teaching kids how to code. Since 2013, we've been helping everyone develop digital skills. And now more than ever, we're here to help. To find out more, search Digital Eagles. Barclays, we're working to make money work for you.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
I went directly to the president to get an answer on this, and he said to me that he's displeased with China's efforts and that it's hard to see how Hong Kong can remain a financial hub if China takes over.
Kayleigh McEnany there, the White House press secretary, weighing in on the situation with the United States and China. That situation breaking down, tensions flaring up. It's doing nothing in this equity market. Futures rip higher, 1 hour and around about 13 minutes away from the opening bell. We are positive on S&P 500 futures by 33 points, up by 1.1%. In the bond market, treasuries just a little bit lower, yields a little bit higher, up 2 basis points on a 10-year to 0.72%. Outside of that, in foreign exchange, the dollar weaker against the stronger euro. Euro dollar coming up just 0.1%, erasing some of the gains from a couple of hours ago. But Lisa, you and I have been talking about this, just slowly, quietly, in the background, the Chinese currency slowly breaking down as these tensions continue to build.
I'm struggling to understand the trigger point here because we are seeing these tensions build and they are expected to only continue to increase ahead of the election, given the fact that, as you've pointed out, this is a bipartisan effort, a bipartisan push to try to punish China for some of the trade measures, for some of the issues with lack of transparency around COVID-19. There's that definitely that seems to be out there, certainly weighing on the currency, but not really anywhere else. I'm struggling to understand what it would take for that to change.
Let's bring in Bloomberg's Kevin Cerulli for the latest down in Washington, D.C., shall we? Kevin, I understand there's a bill going through the House that the president's carefully taking a look at. Can you give us some of the details?
Precisely, and in fact, it has bipartisan support from Republicans and Democrats, as both of them, both parties are in agreement here. It's one of the rare geopolitical issues where Republicans and Democrats agree. Now, what this would entail is that individuals or financial institutions who are involved in China with regards to these national security laws could be sanctioned. They could be able to not do, or the U.S. could put them on a sanctions list. Now, I'm told that this is just the first step in what could be a longer-term process, so the punishment could increasingly get worse if Beijing does not back off.
How much emphasis is there on responding to China's incursion on Hong Kong's independence versus trying to avoid undermining the recovery that we're seeing, especially ahead of the election? How much does President Trump really want to see a China tension story play front and center as he tries to rejuvenate the economy?
Lisa, politically speaking, the president views it as an asset, politically speaking, to be tough on China. And in fact, both former Vice President Joe Biden and President Trump have both said that they would be the more aggressive president in terms of dealing with Xi Jinping. So it's not that one particular party is saying that there should be a different handling of how to deal with China. That is a stark contrast, mind you, to how Russia played out in the 2016 election. Unlike 2016 in Russia, both Democrats and Republicans are in agreement that there has to be a more aggressive policy, geopolitical approach to dealing with China. Biden's campaign is saying that he can handle it, that he would know how to do it because he would be able to rally European allies. The Trump campaign is saying that President Trump has proven to be Xi Jinping's worst nightmare.
Kevin, let's talk about next steps, shall we? We've discussed whether Beijing actually cares about the special trading status of Hong Kong to the degree that it would back away if it was threatened with it. The administration, according to our reports, looking at the Russian route of things, the Russian route of things, sanctions on individuals, on businesses, and maybe not necessarily going forward with rescinding the special trading status of Hong Kong. Any detail there, Kevin?
Yes, and that's really where all of this is headed, is that China could say in the short term that perhaps that would not have significant economic decline for them or a negative impact for them in the short term. However, what we've seen over the last 2 weeks, Jonathan, as we've all talked about before, is this steady incremental approach from U.S. policy from both parties, taking, little steps forward in terms of a more aggressive approach against China. So I think the next step here is not just dealing with China, but investment in other countries. And I think you should look at India as one potential place that in the long term the U.S. is looking at. I spoke with one senior State Department official who pointed in that direction. And I would also just note these types of international standards around different sectors, 5G, as well as the energy sector, in trying to get Europe and the U.S. back more on the same page. That's something that the president has struggled with, or maybe not even struggled, but has not viewed that as necessarily an asset in his first few years in office. But that could start to change over the next couple of years.
Kevin, because naively, previous administrations have focused on one thing, shaping and influencing the behavior of the Chinese Communist Party. And I think you get to a point in time where you've got to recognize time's up, that their ability to actually shape and influence the behavior of the Chinese Communist Party is really limited. Previous administrations failed on that as well. And as we look at this administration, I wonder if we're witnessing a shift now, Kevin, that there's a realization that they can't influence and shape the behavior of the Chinese Communist Party. And we've got to leave that to one side and focus on what we can do here at home. Repatriate supply chains, get allies on board, and create a wider, bigger sphere of influence with the United States at the center of it.
And I would go one step further and to say that this is a realignment of a longer-term foreign policy approach that Democrats and Republicans, and I know I sound like a broken record here, but Democrats and Republicans are in agreement on. To your point, the U.S. policy for the past at least 2 decades has been to engage with the Communist Party of China. Sometimes the best response is no response, and ignoring, and sometimes silence can speak volumes. I would argue that the president has forecasted that in the last 3 weeks because he has not said that he wants to get on the telephone with Xi Jinping at all. This is a president who has engaged frequently with all different types of foreign leaders, from Kim Jong-un to other foreign adversaries. And now he's giving a bit of the U.S. cold shoulder and saying, you know what, if you're not going to play ball, we could find another country to invest in that will.
Kevin Cirelli with the latest down in Washington, D.C. Kevin, thank you, sir. Always great to catch up with you. Lisa, I think it's absolutely critical. Are we making that change? Are we moving away from trying to influence the behavior of the Chinese Communist Party? Are we realizing that it's got to be about creating a wider sphere of influence that includes Europe and includes countries in Asia as well?
Yeah, but I'm struggling to understand the political will right now. Yes, Kevin is saying it's a bipartisan issue, and yet it's unclear how we get there. I mean, we've been talking about it on this program, the idea of how there's a lot of pushback in revoking the special trading status of Hong Kong because it could hurt Hong Kong and the U.S. more. Also, I am really struggling to understand the economic pullback that could result from an increase in these tensions ahead of the election. I don't know that President Trump really wants to see that.
It's a good point. I just wonder, as you go from shut down to reopen, whether that's really a focus right now. Not much trade going on at the moment. Maybe these politicians, not just in Washington, but also in the UK and elsewhere, feel emboldened to really be aggressive on the trade channel when there's not much trade happening. In this market right now, equities up 33 on the S&P 500. We advanced by 1.12%. A little bit later this morning, we'll be catching up with the New York Fed president on monetary policy in the United States. And next, we'll be catching up with Jordan Rochester of Nomura on this foreign exchange market. From New York City this morning, good morning. We're live on Bloomberg TV and Bloomberg Radio.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants, from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Hey, y'all, Jeff Foxworthy here.
Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg Money Minute.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
At NatWest, we're putting our money where your business is. We've set aside £5 billion of working capital funding for our customers and have already lent over $3 billion to businesses like yours. So if you bank with NatWest and COVID-19 has affected your business, remember, every one of us is here to support you. Search NatWest Business Coronavirus.
Figures for RBS Group. Security may be required. Over 18s only. Subject to status. Business use only.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and Bloomberg Radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro, 60 minutes away from the cash open in New York City. Here's your price action on the S&P 500. We advance a lift. We push higher by more than 1%, up 33 points, just off session highs on a session so far. We advance big time and add yet to yesterday's gains. In the bond market, Treasury's down, yields higher by just a couple of basis points to 0.71%. Lisa and I have been talking about the action in foreign exchange through most of this morning. A stronger euro dollar up by 0.25%, some optimism around the euro stimulus story, and a weaker Chinese currency again, Lisa. And we keep coming back to this. I'm calling it the quiet sell-off because it's just not generating much attention, because it's not causing chaos elsewhere. I think if you saw a sell-off off the back of this in broader risk assets, it would get all the attention maybe it warrants. But right now it's so isolated, hardly anyone's talking about it.
Yeah, people are saying that this is going to be pretty contained. I do wonder, though, Hong Kong is a big area for dollar trading, and I'm wondering if any kind of motion on the part of Washington, D.C. could restrict the dollar funding to China. Could that lead to an acceleration of the weakening in the yuan, and what would that do to emerging markets? For now, again, people brushing this off. It's risk on.
Let's have that conversation now with Jordan Rochester of Nomura, our FX strategist. Conversation of the morning. Jordan, let's talk about it, please. We've got this Chinese currency weakness, trying to establish just how much weakness the authorities in Beijing, in China, will tolerate. What's your take on things at the moment?
Well, John, I think it needs to weaken given the stress that the US-China relations are under. We've got that tweet from Donald Trump suggesting that there's going to be something announced by the end of this week. So I think until that moment, we're going to be talking about a weaker yuan. When it comes to the levels, we're talking 720, 730. I think that's not out the realms of possibilities here. And like you mentioned, interestingly, it is quite isolated. I actually have a chart in front of me right now. You have euro dollar versus dollar CNH. They're usually nearly perfectly correlated over the past two to 3 months. And they really have broken down. You're getting dollar weakness elsewhere in the euro pairs and dollar strength against China.
Jordan, what's your take on why it's remained quite isolated? Why we've seen that isolated weakness and hardly any of it's bled out to the rest of the market?
Well, I think what you kind of commented on, it's been a slow grind rather than a bang. In terms of like the moves I'm looking at, you've got some optimism playing out thanks to what's going on in Europe. So, of course, naturally, euro will be a bit higher thanks to this recovery package. And the China story is a China story. It's not a reason to sell everything. It's done somewhat slowly when it comes to these sanctions. So I think markets are being a bit picky here when it comes to why they're doing such a thing. I'd focus on a few things in Europe, which is you're seeing banking stocks start to show some signs of outperformance for the first time in quite a while. And you are seeing steeper curves too, like 1s, 3s box spread. That's the European curve versus the US curve. It's actually rising slightly as well over the past couple of sessions. So there are reasons to be buying euro from a short-term perspective, and that's why you've had that breakdown.
Jordan, one reason why perhaps people are buying the euro this morning is because of that 750 euro package that the European Union is proposing. I'm wondering how much of that has already been priced in as a done deal since, as John was pointing out earlier this morning, the Frugal Four have not signed on yet.
I agree completely. I actually feel like a negative Nancy when it comes to this because I'd like to be hopeful. Hope's a powerful thing. And we kind of had that when the market was trading around 108. I think the move from 108 to where we are now is pricing in some of this package. Now, we've all looked at the details given today. We've got a slightly bigger number in terms of the total. So 750 billion overall for this new package. 500 of that will be in grants. That's the good news. However, that was kind of in the realms of what we expected. So you're right, I thought it was a bit priced in, and that's why the move's been barely much of a big move. Euro's been very cruel. It's been in a 108 to 110 range for the past 2 months, and I don't see it breaking that today. What would change is if the Netherlands, Denmark, or Austria, or any of the Frugal Four were to say, we want to change our minds on this. The paper they put out yesterday doesn't suggest they're going to do that, though. But when one of them does change their mind and agrees to this package, that might start a chain reaction. Some things to watch out for. First of all, the market is not long euro. It's not short euro. So actually, what that means is there's not some massive reason from a positioning angle why you should buy the euro. Another thing to point out is we've got the ECB coming up next week, and they might look to increase the QE package. So yes, you have good news from fiscal this week. It's kind of priced in. We don't go that far in euro dollar. And then the ECB next week might surprise us with a big stimulus package. We could see more QE, and therefore we see yields suppressed again, and euro goes back down. So I'm a bit of a negative Nancy, as I said. I think we're still in this 108, 110 range. I am biased from this level to be short. I will change that tune if we break 110.50 or indeed 110.78, John, because that's where you start to see a few CTA trend following position strategies. That's when they will reduce their short euro position and we get a position unwind.
John, this is really fascinating to me, and I will say that a lot of people yesterday I was speaking with said part of the risk rally that we're seeing is because of the weakness in the dollar, and you have to wonder if the euro starts to weaken and we see more strengthening in the dollar, what that will do to the risk asset balance. It's just been a really hard call, John.
Well, I'm really interested into what the ECB can actually do in terms of doing more. Jordan, what does more actually look like at the ECB? And it comes at a pretty interesting time as they get some pushback from the Constitutional Court in Germany that they turn out the next time around and do even more QE.
I thought it was fantastic. We had that announcement from the German court, and then the ECB didn't slow things down. They picked things up, as you just said. The QE that they're doing has been not as impressive as other central banks, though, John. And I think that's what they need to do. I want the ECB to be less like their past former self and more like what the Fed did or what the Bank of England is doing. So just to give you some numbers, every week the ECB is purchasing around 0.3.5% of GDP. And that sounds like a good number, but the Bank of England is doing pretty much double that. And the Fed at one stage was doing at least 15 times that. So we need to see the ECB increase the package. If they did something like 500 billion, that would be towards the top end of estimates. If they went even further, that would be even more fantastic for spreads. And that would mean you'd see risk on in terms of equity markets. You'd see peripheral debt spreads narrow. It actually would mean the euro goes lower, though. As we all remember, higher QE leads to a weaker currency. And then when it comes to...
Yeah, that's what I wanted to jump in on, Jordan. Just forgive me for jumping in, because I think that's absolutely critical. Why QE in Europe and an increase of flows into the continent off the back of optimism actually results in a weaker euro. Now, that would be intuitive for a lot of people outside of Europe. That's what we're used to. I'm just wondering why that will play out this time around in Europe.
Well, it's wrong if the curve doesn't flatten. So if we get somehow QE where the curve steepens, which would be quite bizarre, then you could see higher yields and then the euro goes higher. But that's really not going to happen. What should happen is higher QE, flatter curves, and less attractive risk-free rates in the euro area via bonds, and therefore you see less inflows into euro area chasing those rates. That dynamic does change if you somehow see foreign investors think, you know what, I know value investing has told me that European banks are cheap, and I know that it's been saying that for years, and I've ignored it, but now's the time to do it. If that was to be the case, and you saw inflows on the equity side into European banks, for example, and other asset classes, that could be a dynamic change, and euro heads higher, and that could be the risk-on dynamic. But euro is not really being trading like that, and I don't see the QE package making everybody buy banks.
Jordan, just taking a step back, I'm wondering, given the fact that the U.S., Europe, and Japan are all engaging in unprecedented fiscal rescue packages and monetary easing, how much will this essentially and eventually benefit emerging markets, which really haven't seen it up till now?
Well, I guess until we know the end, when we know there's an end point. So if there's an antiviral solution or if there's a vaccine developed, I think that's going to be the day when we can all truly say the worst is behind us. And in terms of the word stimulus as well, we have to bear in mind it's not really a stimulus for a government to order everybody to stay at home and everyone to work from home if they can. The stimulus that we're seeing is just trying to offset the damage done by these social distancing measures. So it's also about getting the balance. It's when we know that we're not going to have a second wave. It's when we know there's not going to be a third wave. Then I think you can start thinking more broadly about being as long risk as you can. But these emerging markets do have hard dollar debt to pay. They also are overexposed to certain sectors, such as trade and tourism, more than developed countries are. And that's why those EMs will still remain under pressure until we get those big questions answered.
Hey, Jordan, good to catch up with you, mate. As always, fantastic to have you with us on the show. Jordan Rochester there of Nomura. Lisa, Jordan mentioning the banks over in Europe. We've had a big couple of days for the European banks. Deutsche Bank on my screen over in Frankfurt, Germany right now, up by 4.5%. The optimism, I get it, it's real. I just wonder the reality around the situation. The likes of Austria and the Netherlands, are they behind the package that people are talking about? Has their position moved? Because that's what's critical here. People can throw around bigger numbers, but if it doesn't have the support, the bigger numbers don't mean a single thing.
Well, there's also a question of whether these banks just are coming off incredible lows. They've been in a bear market for a really long time. European financials doing particularly terribly. And Deutsche Bank's Christian Saving coming out yesterday and saying that part of the issue that they're seeing is a continued momentum in their trading revenues, particularly fixed income trading. So there is that kind of tailwind underneath these already very beaten up credits. A big question mark in my mind is all of the potential credit losses. How much have they already been factored in? Whether the accounting regime has adequately shown light on what they potentially are, as well as the potential wave of consolidation that no one seems to be talking about anymore. A lot of questions, yet still, the valuations are so beaten up, John. This is an increase, but off a very low start.
That's the story in Europe for the last 10 years. The valuations, and then it's just been a value trap again and again and again. I have no idea if this time's different. We'll get much smarter people than me to try and answer that question. Alongside Lisa Bravitz, I'm Jonathan Ferro. Next up on the programme, we'll bring you a conversation on China. Then later, in around about 50 minutes actually, we'll be catching up with the New York Fed President, John Williams. Looking forward to that conversation. Alongside me will be Michael McKee. As we count you down to the opening bell in New York this Wednesday morning, good morning to you all. With equity futures nicely positive, this is Bloomberg Surveillance, and we're live on Bloomberg TV and Bloomberg Radio.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Lisa, thank you very much. President Trump threatened to regulate or shutter social media companies, a warning apparently aimed at Twitter after it began fact-checking his tweets. In a pair of tweets this morning, President Trump said that social media sites are trying to silence conservative voices. There is no evidence that Trump has the ability to shut down social media networks which are run by publicly traded companies. Joe Biden slammed President Trump for sharing a tweet that mocked the former vice president for wearing a mask at a Memorial Day ceremony during the pandemic. The presumptive Democratic presidential nominee told CNN Trump is fueling a cultural opposition to wearing masks.
He's a fool, an absolute fool to talk that way. I mean, every leading doc in the world is saying we should wear a mask when you're in a crowd, and especially when you know you're going to be in a position where you're going to inadvertently get closer than 12 feet to somebody.
Biden says President Trump's macho stuff is going to cost people's lives. Protests were held in Minneapolis yesterday over the death of a black man who was in police custody. 4 city police officers who were involved in the arrest of George Floyd were fired yesterday. One of Floyd's brothers, Rodney Floyd, says the video shows how his brother was abused, particularly the officer pinning his brother's neck to the ground with his knee.
Again, we say neck, but that knee was on his throat. Windpipe. We got to call it like it is. And I'm tired of just crying on TV, and this hurts all of us deeply. And, you know, look, we just need murder, complete charge them with what they done.
Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. A big chunk of shopping malls and shopping centers could end up shutting down because of the COVID-19 pandemic.
It's not inconceivable that we could see, at least half, maybe 80% of them shutter.
Retail landlords are already notifying thousands of tenants they're in default, and Scott Crow is chief investment strategist at Center Square Investment Management. He says that could tip the already ailing retailers into bankruptcy and cause a ripple effect across the country, especially since even before the pandemic, many of the anchor stores, he says, were operating on obsolete business models.
The problem that creates for a mall landlord is this. There's something called a co-tenancy agreement. A co-tenancy agreement means that if the anchors fold and you get a certain level of vacancy in a mall, other people can skip their lease. That's what we're likely to see on the back of this, unfortunately.
And Crow is forecasting pain in the commercial mortgage-backed securities market as a result. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Connecting decision makers.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
on the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Think about the news flow over the years. It's been mainly on the other side. It's been all bad stuff about breakups and defaults and credit downgrades, etc. But this is a game changer, and 500 billion could be the start. It could be 3 or 4 times this.
A good friend of ours, Steve Major of HSBC, weighing in on the stimulus that we could get from the likes of Europe. That's given the market a lift, or at least a helping hand. Here in the United States, it means equities are higher by more than 1 percentage point. On the S&P 500, up by 35 points. The FX market, talked about this a lot this morning. A stronger euro off the back of this. Euro dollar through 110. Just 10 days ago, we were 108 flat. So we've moved 2 figures in just over a week. 110.14, up a third of 1% on the session. That's the stimulus conversation over in Europe. Here in the United States, Lisa, as I get set to step away and prepare for the next hour of programming on TV, I can say on TV and on radio as well, at 9:30 Eastern, we'll be catching up with the New York Fed President John Williams on the next step for the Federal Reserve. They have done a hell of a lot over the last couple of months. I just wonder what we can expect for the months ahead.
Yeah, how much are they preparing to do more, and how concerned are they about elevating valuations to such a degree when they are not going to backstop solvency risk, which seems to be very much at the forefront? John, we'll let you...
I don't think they're concerned at all. I don't think they're concerned about it at all. Otherwise, why on earth, Lisa, are they buying junk bond ETFs?
Yeah, although they do discern the fact that it's just the highest quality junk bonds that they're focusing on, and not that much with respect to junk bond ETFs. But I have no doubt that you and our Michael McKee will press him on whether they are starting to feel uncomfortable at all, and put that question to him. We're very much looking forward to it. I know you've got to prepare. I'll let you run as we shift gears to China, very much also in the focus right now. And I'm so pleased to say Leland Miller of the China Beige Book, CEO, joins us now. So hard to parse the noise from the reality when it comes to some of the saber rattling between the U.S. and China. Leland, what measures being currently proposed by U.S. Congress should traders, should analysts be taking more seriously?
Well, there are a couple of different things happening right now, and I think that's one of the reasons why people are a little bit complacent about what's really an enormous downside risk to markets over the coming weeks and months. POTUS has come out and said, we're going to make I'm going to make a big announcement on Friday. The presumption is he's going to come out with some sanctions and some other threatening moves. Congress has come out with a bill that is actually quite aggressive in that it sanctions individuals, but it also sanctions Chinese banks that assist those individuals in cracking down on the Hong Kong protests. And so you've got these sanctions looming over markets, but the bigger deal is actually the question of special status for Hong Kong. So Hong Kong has a special relationship with the United States in that we don't treat it like mainland China. That it's sufficiently autonomous from China to treat it differently. And the State Department has to make an annual certification that remains the case. This has always been sort of pro forma for years and years and years. Now it's a big question. And if this passes, if these Article 23 sedition laws are jammed through Hong Kong from Beijing, there's a very good chance but we will see decertification from the State Department, and that decertification will likely lead at some point in the near future to special status removal, although the president will have the ability to make that bigger or lesser, depending on how he wants to run this. So a lot of things and a lot of risk coming from these actions.
Leland, who would that hurt more, revoking the special trading status, the U.S. or China?
Well, it's not really going to hurt China directly. It's going to hurt Hong Kong. And that's the main problem with this, is that most people in Hong Kong are very, very opposed to the fact that Beijing is stamping out their liberty and doing away with one country, two systems. That's why this isn't an automatic move in regards to Article 23. But I think the United States will have to move forward, particularly if you start seeing aggressive actions. When the NPC, when the National People's Congress language is announced, you'll have a question of whether it's going to be, softly introduced, or whether you immediately see the security services pulling people out of their houses in preparation for, Tiananmen Square anniversaries next week. It's a huge political anniversary. So depending on how the Chinese handle this, you could see a very fierce reaction in a matter of days, or you could see this as a slow boil through the next couple of months.
Leland, why is Beijing doing this now?
Well, I think that it's tempting to look at this through the prism of U.S.-China relations, and certainly there's an element to this. But the reality is that in September, Hong Kong has legislative council elections. And just like the lower elections that were held a number of months ago, pro-Beijing forces look like they're going to do very, very poorly. So if you're ever going to sort of tighten the screws and put in some stronger laws that give Beijing control and make sure that Beijing's not embarrassed in September, you really have to act now this summer in order to change the landscape so that Beijing is not embarrassed in September. So a combination of what's happening externally and what's happening in Hong Kong domestically has created this window where Beijing has to act, and probably act aggressively if it wants to change what's going to happen in the fall. And it looks like that's what it's doing right now.
John and I were talking throughout the morning about how markets are pretty much shrugging off a repeat of what we saw in recent years with respect to the rising tensions between the U.S. and China over trade. A lot of people saying phase one trade agreement still on, both countries need it. You're saying it's basically dead in the water. Why do you say that?
Well, look, when people hear sanctions, they're right to sort of, roll their eyes a little bit, say, how meaningful are these sanctions going to be? Is the Congress or is President Trump really going to sanction some very high-level Bureau members with, freeze their assets, do some big-time moves on the sanctions side? Probably not, at least right now. So they're right to not take sanctions too seriously quite yet. But the special status is a really big deal. And if the United States pulls that back, then it changes the U.S. China relationship quite significantly. And look, it reflects the overall deterioration of the U.S.-China relationship going into the fall. I mean, it's getting very, very toxic. And, my belief is it's going to be very hard for the president to stand by the phase one deal. When he's not seeing the deal fulfilled, he's going into a very rough election season. China's the topic of the day. Who's meanest to China is the guy who's going to win this. And he's going to have to stand by the deal until he can't. So I think phase one is in real trouble. I think it's likely we don't see it survive the election. And this is just a reflection of the overall toxicity of the relationship right now.
Leland Miller, CEO of China Beige Book, thank you so much for being with us and for your insights. I know you guys look really under the hood as far as the granular economic data. We'll have to have you back to talk about the reopening there and what we have seen in terms of an economic recovery. Right now, in terms of recovery, we're certainly seeing a lift to equities across the board. The S&P futures, not quite at that 3,000 level, but just inching up to 29.91. The Dow up 529 points. You're seeing a bit of dollar weakness. The euro strengthening. Coming up on Bloomberg Television and Bloomberg Radio, a conversation with New York Fed President John Williams, really looking at whether there is any unease about the fear of missing out trade, the FOMO trade, percolating through all assets. I'm Lisa Abramowitz, together with Jonathan Farrow and Tom Keene. This is Bloomberg Surveillance.
NJIT. This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Pass to the 5! Touchdown! Search classic game replays to listen for free.
The moves may be choreographed, but the drama is real.
I dare you! I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be.
The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. Tom Keene is off today. I am here with Lisa Abramowitz. Bloomberg Surveillance is presented today and, as always, by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business mitigate disruption and mobilize for the future. Visit their Coronavirus Resource Center today, cohnresnick.com/COVID-19. It is another risk-on morning with equity futures looking higher in pre-market trading. And Lisa, this is for you. The bond market just continues to soar. And I saw a Bloomberg News article today that new issuance in the investment-grade market looks to surpass $1 trillion, maybe even as of today, on a year-to-date basis. And that's the earliest on record. Just extraordinary new issuance in the investment-grade market.
Yeah, just to give you a sense of the scope of that, in previous years, the previous record was something like $600 billion so far at this point in the year, and now it's already exceeded $1 trillion. Look, Paul, one thing I'm struggling with, if you look at the yield on investment-grade bonds right now, it is within 30 basis points 0.3 percentage point of the all-time low at a time of economic carnage that we have not seen since the Great Depression. I'm trying to reconcile this, and really the only way to do that really is Federal Reserve, fiscal stimulus, Federal Reserve.
You're exactly right. And if you're a corporate CFO or treasurer and you're looking to shore up your balance sheet in uncertain times, this is the time to do it. So we have futures looking higher. Lisa, let's get a look into what is driving these futures higher. Let's turn to our good friend, Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at right here?
Well, you're talking about all these security sales, and bear in mind, I mean, that's a plus for the banks, and you're seeing the bank stocks doing really well in early trading. Bank of America, for one, up 5%. Now, they told employees in a memo seen by Bloomberg News that they'll return to offices in phases. The moves will vary by role, department, and location. Workers will be given 30 days notice before their scheduled return. But you look across the group, you see Citigroup up 5.5% in early trading, JP Morgan Chase up 4.5%, Wells Fargo up 6%. And then you turn to the travel stocks. They had a great day yesterday, rallying again today. Walt Disney's up 2%. Now, the media and entertainment company will present plans for reopening Disney World to county officials at a virtual meeting today. SeaWorld Entertainment will also be part of that meeting, and its shares are up 6.5%. Then you look at the airlines. And yesterday, the NYC Arca Airline Index climbed by 10% and set its highest close this month. You're seeing double-digit percentage gains for some of the carriers today as well. American's up 12% in early trading. Delta's up 8.5%. United up 10.5%. And it's a similar story with the cruise lines. Carnival's up 12%. Royal Caribbean up 10%. Norwegian up 11.5%. And then you have Twitter, down 2%. Now, President Donald Trump sent a pair of tweets that threatened to strongly regulate social media companies or, quote, close them down. Lord knows how he can do that. But in any case, he sent those tweets after Twitter added a fact-checking label to earlier tweets of his for the first time. You've got Regeneron Pharmaceuticals down 1.5%. The drug maker shares are lower for a second day as its largest stockholder, Francis Sanofi, sells almost all of its 21% stake. Now the sale will raise as much as $11.7 billion for Sanofi. And Moderna's down 6%. The top 5 executives of the coronavirus vaccine developer have sold more than $89 million of stock this year, according to the healthcare news service Stat. The sales were made under a prearranged program. Nonetheless, they are getting people's attention, and Moderna is down. Also down, Keysight Technologies lower by 5.5%. The maker of measuring equipment posted fiscal second quarter earnings and sales that trailed analyst average estimates in a Bloomberg survey. On the other hand, StoneCo, this is a company in which Warren Buffett's Berkshire Hathaway owns a stake. It's up 24%. The Brazilian payment processor said volume has climbed 23% this month, and that growth follows an April increase of 9%. You have Tractor Supply up 4%. The farm store chain forecasts record-breaking results for the second quarter. It's looking for sales growth of at least 20% at stores open more than a year. And another type of retailer, Macy's, up 8.5%. You talked about all the borrowing companies are doing. The department store chain setting up a $3 billion line of credit backed by unsold merchandise, and that's on top of $1.1 billion of high-yield bonds it's now selling that are backed by some of its stores and distribution centers. And you're also seeing Kohl's and Nordstrom higher as well.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that. Lisa, Republicans and Democrats, they've begun, vetting ideas for the next economic aid package to combat the impact of the novel coronavirus. Here with more details about what both sides hope to see in the next multi-billion-dollar, trillion-dollar bill is Bloomberg Tax Capitol Hill correspondent Colin Wilhelm. Colin, thanks so much for joining us here. So again, we know the House has kind of proposed a $3 trillion package. Doesn't seem to have much support in the Senate or with the Trump administration. Where are we exactly with this?
Well, yeah, thanks for having me. That's exactly right. The House has passed this preliminary package. It's basically their table setter for a wish list of what they want to see in this next round of economic aid. The Senate has rejected that. Senate Republicans have rejected that. Obviously, you have two different majorities in each house. And so right now, Senate Republicans and Senate Democrats are in this stage of quote-unquote pre-negotiation where they're trying to vet their own ideas to bring to the table for talks that are going to begin in earnest in June.
So I'm trying to figure out what kind of political heft there is behind this additional rescue financing package, given the fact that we are getting reopening and some of the economic data is expected to be better.
Yeah, I mean, I think there's going to be three major factors that contribute to what Congress does next. Obviously, it's going to be a few weeks before anything passes. So you're going to have more data on what the Fed does, or you're going to have the Fed rolling out more of its emergency lending programs and seeing the effects of those, at least the early effects. You're going to see the data from states that are reopening. And there's going to have to be some kind of compromise on a back-to-work bonus or unemployment extension, since Congress subsidized unemployment and added, $600 per week to the unemployment benefits that people can get from their states. But that's a point of contention and obviously a friction point going into this next round.
Yeah, so Colin, it's when we listen to Governor Andrew Cuomo of New York almost on a daily basis with his press briefings, and one of the themes is the need for states and local municipalities to get some support here, and that unfortunately has kind of politicized a little bit kind of the debate here. Is the expectation that there will be some middle ground found and that the states and local municipalities will get some aid? Is that the expectation within the Beltway?
I think it's definitely a possibility. There was some aid in the previous round. I think with the Fed muni lending program, the backstop for the muni market there, I think they're going to take a look at what effect that ends up having. But I would expect to see some sort of state aid in this next package. It's just a question of size, right? The House Democrats wanted about $1 trillion in state aid. The National Governors Association has asked for $500 billion, and I think you're probably going to see a number that's underneath the $500 billion. But it really depends on what else is in there. That's one of the main things that they're going to have to try to figure out is how much more federal aid to direct states, and then I think you're going to see a lot of other things fall into place.
Well, Colin, I am also struggling with this idea of stimulus versus rescue financing and how much of the additional money will go toward the stimulus aspect, an infrastructure spending plan, something with respect to 5G, versus the rescue financing to plug the gap for employees who've been laid off, fired, and are not getting income.
Exactly. And that's a major struggle for Congress is determining how much do you want to put into an economic recovery that may or may not be poised versus how much do you need to continue to stop the bleeding for the economy. The first package, it's quote-unquote phase 3 in D.C. because there were two smaller bills before it, but the CARES Act, the major economic aid that this is a follow-up to, was more focused on stemming the bleeding, on carrying businesses and people over for a couple of months, basically, until more testing and more public health response had happened. But we don't know exactly what the reopening for states is going to look like, and there's just a lot of different factors that are going into this next package.
Thank you so much, Colin Wilhelm. We really appreciate it.
Yeah, it's really interesting here how this is going to play out.
Yeah, I am curious to also know the political pressure to do this additional round of stimulus at a time when a lot of Republicans are starting to say, let's wait and see. Colin Wilhelm of Bloomberg Tax, thank you so much for being with us. Now the news, Michael Barr. Michael.
Thank you very much, Lisa. Thank you very much, Paul. New York Governor Andrew Cuomo says he will travel to Washington to meet with President Donald Trump and plan to discuss major investments in infrastructure as a way to jumpstart a U.S. economy devastated by the coronavirus pandemic. During the briefing, Cuomo explained his plan for LaGuardia Airport.
Accelerating LaGuardia Airport, which is going to be the first new airport in this nation in 25 years. Traffic is low. Passenger volume is lower. Let's accelerate that construction now.
3 years into Donald Trump's presidency, Twitter is fact-checking his tweets. President Trump is firing back, accusing the social media giant of interfering in the 2020 election. 4 Minneapolis police officers who were involved in the arrest of a black man who died in custody were fired Tuesday. The firings come a day after a bystander's video showed the man pleading that he could not breathe as a white officer knelt on his neck and kept his knee there for several minutes after the man stopped moving. Minneapolis Mayor Jacob Fry says he supported the firings 100%.
It is the right decision for our city. The right decision for our community is the right decision for our Minneapolis Police Department. We've stated our values, and ultimately we need to live by them. It's essential for accountability now and going forward. I appreciate it, and I support you in that decision.
Last night, protesters smashed squad cars outside a Minneapolis police station. Private rocket company SpaceX is set to launch 2 Americans into orbit this afternoon from Florida. The mission marks the first time American astronauts will take off for space from U.S. soil in 9 years, possibly marking a shift in how NASA does business. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul.
Michael Barr, thank you so much. We appreciate that update. Looking at the futures here, Lisa, a little bit of mixed here. We've got the S&P up about 0.9%. I got the Dow up 1.3%, but the NASDAQ off just about 0.2%, maybe a little bit of concern about regulatory risk weighing on some of these tech names. We had, again, President Trump suggesting that maybe you need to regulate these tech names, maybe even shut them down, anti-conservative bias. Those types of concerns.
Looking right now at Amazon shares, they were higher. Now they are lower by 0.5%. On the heels of those comments, I'm wondering how much the U.S. equity markets can continue to rally without the leadership of Amazon, Netflix, and the others that have gained.
Exactly right. They've been the real leaders in both directions for the markets over the last several months, and the expectation is they would continue to be the leaders. We'll certainly follow up with that look at the equity markets. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Influential conversations from
TSB believe in people helping people. So if for whatever reason you become an innocent victim of fraud, they will refund every penny you lost from your TSB account. Find out more about their fraud refund guarantee at tsb.co.uk. Terms and conditions apply.
The IBM Flash storage solution can be broken down into 3 S's. Speed. Retrieve data fast. Scalability, grow your storage as your business grows. Simplicity, easily migrate and integrate with existing systems. Oh, and there's a fourth. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Lines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. S&P 500 futures are rising for a third day as optimism mounts that the global economy is on the rebound from the pandemic hit. Contracts on the S&P 500 jumping back above 3,000, a technical level considered key by chart watchers. For a second day, stocks most punished by the coronavirus, from Carnival, which is up 10% in early trading, to United Airlines, are surging as investors anticipate a sharp uptick in spending on non-essential goods and services. Futures on the tech-heavy NASDAQ 100 index are lower as investors shun the high flyers that dragged equities off their lows throughout April and much of May. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 28 points this morning. Dow futures up 343 and NASDAQ futures down 22. The DAX in Germany is up 1.8%. 10-year Treasury down 2/30 seconds, yield 0.70%, and the yield on the 2-year 0.17%. NYMEX crude oil is down about 2.5% on 84 cents at $33.51 a barrel. COMEX gold is down 1.4% or $23.80 at $17.0440 an ounce. The euro 1.1007 against the dollar, British pound 1.2277, and the yen 107.87. And that's a Bloomberg Business Flash. Paul and Lisa.
Thank you so much, Karen. There's a question that's been permeating markets and just basically sloughed off to the side, which is you speak to the experts and they say, we don't really understand the virus. You speak to non-experts and they say, we're counting on a reopening and we're counting on a U-shaped recovery. We spoke earlier, Bloomberg's Francine Lacroix, with Lauren Sawyer, assistant professor of emergency medicine for Johns Hopkins University. Sawyer was asked, how much more do we know about the coronavirus now than 2 weeks ago? Take a listen.
We're getting a much better picture based on the testing data that's being, the increased numbers of testing and the testing data that's being shared. The challenge with the CDC combined testing data is it's two different types of tests. So it's an antibody test, which doesn't talk about acute infection, and then it's the viral test, which tells you if you're sick right then. So the sooner we can disaggregate that testing, the better we'll be. But just seeing the testing data flow in is so important to all these phased reopenings.
Are we closer to really finding in these studies a medication, something that works? I know we focus a lot on remdesivir, but how much more knowledgeable are we on that today, as opposed to a month ago?
Yeah, so we are we're seeing a lot of the data come in from these early studies. The remdesivir trial, the ACT trial from the NIH, just pushed their first major paper out, which definitely showed improvements to recovery time and clinical status and mortality, which is great. There's a lot of limitations of that study. It's the first one out of the gate for them, and I'll disclose I'm an investigator of that study, but the study design is really good, and the placebo arm shows that allows us to see a lot more about how the patients are recovering. We also saw some recent data from the hydroxychloroquine, a major hydroxychloroquine registry study, which actually led to the WHO and some other places suspending the use of hydroxychloroquine because of some harms identified and potential safety concerns from those studies. That wasn't a placebo-controlled study, so we have a lot more to learn about hydroxychloroquine as well, but we're seeing good data coming out of really rigorous studies, which are improving our understanding of what therapies are going to work and what therapies aren't going to work and may even cause harm.
Lauren, do we have a good handle of how many people have had COVID so far in the US, but also worldwide? We need to test more just to understand the hotspots, how this thing is moving around.
Yeah, I mean, I think we could always test more. It's always good when you start to see the positivity rate in the testing that you're doing going down, which we are seeing. The WHO would like to see, roughly 5% positive of all the cases, of all the tests that you're being done, or less. Less is always better. But right now we're between. I mean, we're all over the map in so far as that rate. So I think we have a ways to go on testing, but there are a lot of strategic efforts that are happening, which is really great. The more we can test, the better. The more we can use those other public health measures like social isolation social distancing while we're increasing our testing capacity and making sure that the testing's happening in the right spot. So accessing those rural populations, accessing new hotspots, making sure the testing data is separate based on the type of test, all the better.
When do we know how long antibodies are here for in people that develop them and test positive to the antibodies test?
Yeah, it's going to be a ways to go on that. I think we'll have to do longitudinal studies to really understand how people's antibodies develop. Some of the early data that's coming out does show that a lot of people have antibodies, which is good. What we have to understand is if it's those neutralizing antibodies, and the antibody tests are helping, but we're still seeing a lot of false positives and false negatives in those antibodies. So in those antibody tests, so the tests have to get better in order to really do those rigorous studies. And I think people are working on that. I think that there's a lot of science behind the idea of understanding who makes neutralizing antibodies and who develops immunity, and what that picture of immunity looks like, how long it lasts. But there's a lot of work left to be done.
That was Lauren Sawyer, Assistant Professor of Emergency Medicine for Johns Hopkins University, in a conversation earlier this morning with Bloomberg's Francine Lacroix. One thing I'm struck by is the optimism, Paul, that we're seeing around a vaccine. Yep. And yet a story that caught my attention yesterday was Merck's CEO saying that the 12 to 18-month horizon for a vaccine seemed extremely ambitious, more ambitious than ever seen before. This is the reason why the company did not sign the warp speed pledge that President Trump put out there. I just wonder what kind of dampening effect it would have on some of the sentiment if this really did show to be the truth, which is it's hard to get a vaccine through.
It's hard to get a vaccine through. You're so right. And, we've been, so accustomed to when we think about drug approvals, measured in, 4, 5, 6, 7 years with all types of testing and retesting and FDA approval levels and things like that. So that 12 to 18 month that Dr. Fauci initially put out several months ago was admittedly aggressive in his, his comments. He admitted that was aggressive, but he thought it was realistic. That's now been kind of picked up and I think kind of discounted by the market as the, kind of the expectation. But again, the Merck CEO kind of suggesting that may still be ambitious. And that's going to be a real issue sentiment-wise for investors, I think, going forward. I think you're right.
Just to give you a sense, the Ebola vaccine, which has been in the works for years, just got approved by the FDA. And that has to do with something that we saw years ago. Just to bring you some of these comments by CPO, the Chief Patient Officer of Merck. I hope the people who are predicting a faster timeline than we have ever imagined are right. But we are talking about vaccinating the world, not just people in a given developed country.
Yeah, you're exactly right. The logistics of it, are just really beyond expectations. I mean, you think about the production of the whatever vaccine is created, and then the distribution. Just the logistics of it are just mind-boggling. So we'll have to see how the biotech and big pharma industry really responds to this. We'll have more on that, of course, coming forward. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.
Whoa, just got a Moonpig reminder that it's your birthday Saturday.
Yeah, I set that up.
Oh, do you know what? I forget one time. Okay, I'm in the app.
Oh, the romantic card section.
I'm full of surprises. Now, what rhymes with babe?
How about just uploading a nice pic? No, wait, I'm not ready.
Hey, I love you from every angle. Now for the gifts. Oh, and flowers.
Heartfelt can happen anywhere with Moonpig.com. Download the app now.
The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spit and Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, you know, I just...
Carve up the ice with NHL at the rink.
The other day I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now. Like, all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
This is Bloomberg Surveillance. I'm Lisa Abramowitz alongside Paul Sweeney and Tom Keene. Off today, the opening bell brought to you by SEI. Crises and challenges highlight the power of partnership. Work for the common good with community. SEI. Go to SEIC.com/banks. Right here in the markets, we are seeing a bit of a lift across the boards. NASDAQ reversing some of the earlier declines that we saw ahead of the open. The S&P now climbing above that key 3,000 mark. Right now, let's head over to Bloomberg Television, where John Williams of the New York Fed is having a conversation with Bloomberg Television's John Farrow as well as Michael McKee. Let's head over there right now.
For our audience worldwide on Bloomberg Radio and on Bloomberg TV, I'm really pleased to say that we have an exclusive conversation now with the New York Fed President John Williams. Alongside me, as always for these conversations, our very own Bloomberg's Michael McKee. President Williams, fantastic to catch up with you, sir. Let's just start with a broad one if we can. Given what we know right now, in this very moment, how satisfied are you that the Federal Reserve has done and is doing enough?
Well, I think we've done an incredible amount in the past few months. First, starting in early March, we cut the target federal funds rate by 150 basis points to close to zero. We put out forward guidance indicating that we're expect to keep interest rates low for quite some time. And of course, we've done enormous actions in terms of providing liquidity and supporting market functioning in Treasury, mortgage-backed security, corporate bond markets. We've got most of our facilities now are open for business, and we're seeing some really big impacts from that. Market functioning has improved pretty significantly. Liquidity is flowing much better, and I feel like we've gotten ourselves in a good position now. We still have work ahead of us, especially around providing for our Main Street program that we're looking to open pretty soon.
John, New York is starting to open up. New York City, the only part of the state that is not open now. As it does, what are you seeing? What are you expecting in terms of the ability of the economy to come back? How quickly? And the same as the rest of the country opens up. What do you think you're going to see now?
Well, I think we're starting to see some initial signs of what that looks like, and looking at all this high-frequency, very granular data that all of us have become experts at. We're seeing people willing to travel a little bit more. We're seeing retail sales pick up some, especially in areas where the restrictions have been lifted. So I think we're starting to see some signs of increased economic activity and returning to people spending money and being willing to travel and stay at hotels and things like that. I think one of the big challenges for the New York area is that tourism is such a huge part of our economy, whether you think about, traveling to visit not only New York City, but New York State and the region, and obviously entertainment and all the cultural attributes that the city offers. So I think that that's going to be an area that the recovery, may take longer. I see construction and manufacturing as areas where we may see a return to better economic conditions sooner. But we'll be watching this data very, very closely and carefully.
John, as you go from shutdown to reopening, can you talk to us about how policy needs to evolve in line with that and how objectives at the Federal Reserve might shift?
Sure. And, over the past couple months, as I, mentioned, we've really been focused on making sure that credit is available to households and businesses. And that's what our facilities have been really about, making sure that markets are functioning, there's liquidity out there, and that we're seeing credit continue to flow to small, medium, and larger businesses and households and state and local governments. So that's really where our focus has been, and that's where we'll continue to be, because I think that's the real issue for us, during the pandemic phase and as we recover. Obviously, we're also very focused on, monetary policy. How can we best, provide guidance about our future intentions around policy? How can we best shape the use of our tools to support a very strong economic recovery and getting back to where we were early in the year, because that's really where I see our objective. Get the economy back to the kind of conditions where we had close to maximum employment and price stability, which was just a few months ago. So that's really where I think our focus will be.
One of the issues is who's going to be around to reopen once we finally do. And the chairman has talked about the problem of transitioning from a liquidity crisis to a solvency crisis. Where do you think we are on that spectrum, and how worried are you that we're going to have a wave of bankruptcies in New York and around the country?
Well, I think what we need to do is address both the liquidity issues, which, of course, we've been very focused on with the support from the U.S. Treasury through our facilities and obviously on our own with monetary policy. But we also need, alongside that, fiscal policy that can provide income to households, to state and local governments, to other hard-hit areas. So I think it's really the combination of liquidity policies, funding policies, and programs, and also making sure that fiscal policy is helping support not only small and medium and large businesses through this period, but obviously households, nonprofits, state and local governments. So it really takes all of these coming together to deal with this range of issues. Hopefully, we'll by providing credit and availability of credit through this period, it will help businesses get through this period and be well positioned to start opening their businesses and rehiring their employees and getting back to work. That said, the virus is driving this. We're really being following how that the pandemic evolves and how that improves, and that will be really, I think, the important driver of how the economy recovers.
In terms of designing fiscal policy going forward, former Fed Governor Kevin Warsh said yesterday that what we're seeing is a supply shock, and you should have policies that address that. Most economists seem to think it's a demand shock. What do you think?
Well, I think I'm an economist, so of course I'm going to talk about supply and demand. I think it has combination of both of supply and demand. I think in the near term, over the next year or so, I really do think that the predominant effect is going to be on demand, even though it obviously has major supply effects too. That's why we're seeing inflation coming in so low, and I expect inflation to actually be low over the next year or so, and because the demand effects will even be even larger than some of the supply effects. I do think that the issues that policymakers need to think about, especially in terms of legislation and things, is really how to really put our economy on a long-term, strong, sustainable path. That's an issue not for the pandemic stage and not for right now, but really, I think, a focus for the next few years.
John, you've talked about market functioning, and quite clearly you've kept this market wide open for corporate issuers for a whole host of reasons. Do you see it as a role of the Federal Reserve to keep this market wide open for the Treasury to come in as well and continue doing fiscal stimulus?
Well, I think that really depends, like I said, on what happens with the virus, what happens with the economy. And I think that the role of fiscal policy will really depend on how the reopenings roll out, how the economy shows signs of recovery, and what's really the best targeted policies.
Well, I guess what I'm asking, John, is what is the Fed's role? What is the objective? If you have basically an explicit objective to keep this market open for companies to come in and fund themselves, does that carry over to the Treasury as well?
In terms of carry over to the Treasury, in terms of which
in terms
role?
Of keeping the Treasury market open for them to come in and fund themselves?
Sure. Well, I mean, the U.S. Treasury market obviously is the centerpiece of the global economy, and all other fixed income markets price off that related to that. So for us, a very essential role for us that we've been very focused on is making sure that the Treasury market and all the associated markets around it, including mortgage markets and others, are functioning well. And that's what our purchases have been really aimed to do, and that's what we've seen happen. And that's really, I think, a critical component of making sure that credit continues to flow to households and to businesses.
I know that it's kind of hard, John, to put together a forecast right now, so I wonder if the Fed is actually going to follow through on June 10th at the next meeting with the idea of the economic projections and the dot plot coming back. Are you really going to do that? And if so, what numbers would you plug in terms of GDP and unemployment going forward?
Well, as you know, Mike, we're right in the early days of working on our forecast for the upcoming FOMC meeting and doing a lot of analysis. And I agree with your premise that one forecast or your baseline forecast is not nearly as informative today as it would be in normal times. So we're really focused not only on coming up with what we think of as a reasonable forecast, but also thinking seriously about what other scenarios could happen, whether more positive or potentially worse. And so really, I think the focus is not just on understanding what your baseline forecast is, but thinking about what the range of scenarios that could happen and how we could best position policy in terms of that range, and really think about this in terms of a risk management. But my expectation is we will be we're able to publish forecasts, prepare forecasts. We have an outstanding team of economists here in the Federal Reserve who this is what they do every day, and the most important part of this is we're kind of having to do this with a lot of new data, a lot of this high frequency data from social media, from tracking how people are driving and all of that, and that's a really new part of how we're approaching thinking about where the economy is and where it's likely to go.
Yeah, I don't want to suggest that that's easy. We all know it's difficult, John. I'm sure you've got a tough time coming up with those forecasts in the next meeting. A lot of people are focused on your next moves on forward guidance and specifically yield curve control. You've talked about the Treasury market functioning. Let's talk about Treasury pricing. Do you see yield curve control as a tool to complement calendar-based guidance in a way that Vice Chair Clarida suggested in the last week? Or do you see it potentially as a tool to shape longer rates? Which one would it be for you, John?
Well, I think we have a lot of options in terms of our toolkit, whether, we've used obviously forward guidance of different types in the past. We've clearly used asset purchases to affect financial conditions in the past. And the yield curve control, which has now been used in a few other countries, is I think, a tool that could potentially complement forward guidance and or other policy action. So this is something that obviously we're thinking very hard about. We're analyzing not only what's happened in other countries, but also how that may work in the United States in the context of the U.S. economy. And really our focus, as always, is to use all of our available tools to best achieve our maximum employment and price stability goals. So we're going to think through that very carefully and come to decisions over time.
Yeah, John, I think there's just a lot of confusion in fixed income markets right now, just from people we speak to every day, on the potential of yield curve control and where it will be focused. Could you set expectations for us? Do you think the focus should be on the front end to anchor rates and supplement Canada-based guidance? Or do you think you can do things on the longer end? Quite clearly in Japan, it's a different market. In the JGB market, they can do something on the 10-year. I'm just wondering what you think about in terms of the longer end of the curve here in the United States and what you can do with yield curve control.
So, these are issues that we're, obviously studying very carefully and we'll be discussing, as a group. So I don't have anything that I can say about what will or will not happen. But really, my view is that the focus is always on just how do we best use the tools that we have? How do we best use whether our communications or our guidance? How do we use whether it's the balance sheet or other actions that we take to achieve our goals? And it really depends on how the economy is likely to evolve. And right now, there's just a lot of uncertainty about that. I think we're kind of in a good place in terms of maybe we're near the bottom in terms of the economic downturn, and hopefully we'll start seeing improvement in coming months. I expect to see a pretty significant rebound in the second half of this year. But really, I think the answer to your question is what's the right policy response and policy actions will depend critically on how the economy is performing, not only right now, but which path do we see it on in the coming months. And right now, that's still a pretty unclear picture. I think we're going to get a lot better information, over time, really about have we seen the trough and are we seeing what kind of rebound and recovery are we seeing?
Before we let you go, I got to say, even though that it's unclear going forward, have you imagine what it's like on the other side? Because I know you think about things like this. When we came out of the great financial crisis, potential growth was lower and around 2% or a little bit less. What do you think potential growth is going to be when we come out of this? And then I want to follow up by asking, are we in sort of a de facto Treasury Fed accord again, in the sense that you're going to have trillions of dollars in loans out at zero or very low interest rates that would really be crippling if rates went up, especially to the U.S. Treasury? Are you going to be stuck keeping rates low, even if you don't want to, for a very long time?
So, Mike, in your first question, it's hard enough to forecast where the economy is going to be going over the next several months or quarters. Forecasting where potential output will be in the next several years is even harder. Obviously, that's a major area of concern. We really want to make sure that those businesses that exist today and households who are able to get through this period, and we don't have lasting damage to the economy, lasting damage to our economy's potential. So that's really the way I view it is the policies that we're taking, the actions that Congress has been taking are really to try to not only minimize the spillovers from the pandemic on the economy, but to minimize the longer-term damage to the economy. In terms of your second question, the Treasury obviously is issuing an enormous amount of debt due to the various spending programs that have passed. But there's also an enormous demand globally for U.S. Treasury securities, especially given a lot of the movement away from riskier assets. So, we have not seen any signs recently of a shortage of demand globally for U.S. Treasury securities. Markets have absorbed that increase in supply very effectively. Rates are still very low. So this is not a situation where the Federal Reserve is some way constrained or limited in what we're doing because of what's happening, in terms of the issuance of debt securities by the U.S. government.
Before you go, just one quick follow-up very quickly here to something you said about a trough. We're opening up again. Do you think, barring a second wave of the virus, that we have seen the worst now?
Well, it's hard to say because of the data we have is very incomplete. Like I mentioned, we're looking at a lot of little indicators. We're going to get an employment report for May to give a bigger picture there. We'll get some more data, over the next few weeks and months that I think will help us understand that. But based on what we're seeing now, I think we're pretty close. Maybe May or June will be the low point right now based on what we're seeing. But let's just not forget, this is an extreme decline in economic activity, an enormous hardship for people in this country. So even if we're starting to see perhaps a stabilization there in terms of the economy and maybe a little bit of a pickup, we're still in a very difficult situation.
John, we appreciate your time this morning. We've taken up a lot of it, so thank you very much to you and to the New York Fed. New York Fed President John Williams there on the situation with the global economy, this Treasury market, and the next moves to policy. Mike, we tried, didn't we?
Fed President John Williams of New York speaking with Jonathan Farrow and Michael McKee of Bloomberg Television and Bloomberg Radio. Paul, really struck out to me how much the Federal Reserve is relying on the medical data to determine their path going forward, and that seems so uncertain, especially as a lot of the country, at least in the United States, looks around and says, all right, reopening, we're back out there. I mean, you talked about the Lake of Ozarks picture. People are viewing this reopening as a true reopening, Paul.
It's interesting. I think, what we have heard from a lot of folks in Congress as well as the Federal Reserve is that a lot of this is going to be dictated by how the virus behaves as we go into the fall and winter here. So it appears that the country is in a reopening phase, and hopefully that can be done well. And then when we do get to the fall and winter, that can be managed as well. But the New York Fed clearly keeping its options open, still has tools in the toolbox to affect liquidity in the marketplace. Let's get some thoughts on kind of what we just heard from Dr. Williams, from Matthew Luzetti, Deutsche Bank chief U.S. economist. Matthew, thanks so much for joining us here. You listened to John Williams' comments. What were your takeaways?
Thanks for having me. I think my few takeaways are that he seemed to echo a shift in some of the tone from Fed officials in recent weeks. And that is a shift where, they are worried, I think, about more medium-term and longer-term impact on economic activity. He was asked about potential growth. He said that this is a major area of concern that we have. You certainly heard that in the minutes, and Chair Powell emphasized that about 2 weeks ago. The other key area, I think, is what you noted, is that there's just tremendous amounts of uncertainty. And they're, certainly relying on what happens with the virus data upcoming. But we heard from the minutes that this uncertainty is certainly playing into how the Fed is thinking about things. But the staff was pretty clear. They thought an equally plausible scenario was a downside scenario where we did see second waves of the virus coming up, and that had a negative impact on growth. So significant amounts of uncertainty, I think, skewed to the downside from the Fed's view and in our own view, and worries that there are more medium-term negative impacts from this crisis.
What more can the Federal Reserve do at this point?
They've done, obviously, a substantial amount on these credit and liquidity facilities, and they've done a lot on, firefighting activity over the past 2 months. The two areas remaining are certainly on the small and medium-sized businesses, and so the Main Street lending facility that they need to stand up, and that should be coming in the next week or so. I think that's the key here. There was a great survey out by the Chicago Fed recently looking at small businesses and whether or not they would be under financial distress given different types of social distancing. And even under limited amounts of social distancing, you have a large number of small businesses that will be under financial distress. 2/3 of restaurants, half of retail, almost a third of manufacturing. So if this is a slow reopening, a slow return to activity, even if we are reopening, there are concerns and I think worries about how small businesses will weather this. And we're not out of the woods on that category, but by any stretch of the imagination. And so I think we have to think that this is going to be a longer process for both the Fed and for fiscal policy.
So, Matthew, that's kind of where I wanted to go, fiscal policy here. I mean, the first couple of rounds of fiscal stimulus were generally bipartisan, kind of acted upon relatively quickly, starting to get into the marketplace now. This next round of fiscal stimulus, the House has passed a $3 trillion fiscal plan, does not seem to have the support from the Republican side. How important is it to get another round of fiscal stimulus out into the marketplace, and how quickly does it need to be done, in your opinion?
Sure. I think certainly from the market's perspective, we've been rallying substantially, even though there has been some uncertainty over the next phase of fiscal stimulus. From an economic standpoint, I think it is absolutely necessary and critical. There's obviously lots of concerns about state and local governments, their financing conditions. We saw them shed about 1 million jobs in the April jobs report. I think you need to get help there. Things like, again, small businesses. We've seen with the Paycheck Protection Program, just given how slow reopening is taking place, it is not feasible for many of these companies to bring back 90% of their workforce by the end of June, which they would need to do to turn it into a grant. So you need to see a transition or an evolution in how fiscal policy is being treated to think about this as a more medium-term category. The bills now are also looking at, whether they're extending unemployment insurance to help prop up incomes and consumption beyond July when they're set to expire. And so I think a lot of these measures are going to need to be extended because we will have to provide additional income support consumption in a world where we think the unemployment rate is still 11% by the end of the year.
Which is actually different than what St. Louis Fed President Jim Bullard said yesterday. He actually thought that the U.S. economic recovery would be robust enough to push that unemployment rate below 10% by the end of the year. I'm struggling, Matt. We talk to medical experts. They talk about uncertainty. Fed officials, uncertainty. And yet what we're seeing in equity markets has been certainty of perhaps Fed stimulus, of fiscal rescue money, perhaps stimulus on that front. I'm just trying to understand the disconnect here. What has to happen in order to confirm what we're seeing currently in the market?
Yeah, I think you have, certainly a market which has received, decent news, news that we are probably past the trough in activity. Although, as President Williams noted, it was an absolute extreme decline in activity. So even if you are past the trough, the level of activity is well below what we saw in Q1 and in Q4. You are seeing reopening take place. I think it's so far a slow process, despite all the anecdotes you have about large gatherings. We don't really see it in the economic data so far. We have a weekly GDP tracker, which is still pointing to more than 12% decline in year-over-year growth, and the New York Fed's analysis shows the same. But you see a market that is, the market is seeing an economy where that is taking place. So far, although it's very early, not much evidence of a second wave of viruses occurring. I would say that it's way too early to judge that at this point, but so far you're having that. And you see fiscal and monetary policy, very willing to step in so far, including what we heard from on the European front this morning. And the market is taking, some comfort in that. But I would say, just what I noted on the small businesses side, there's consumer and household surveys about, even people, if they believe they were temporarily laid off, do not really think with high probability they're going to be able to return to their job. All these things are suggesting that we're not out of the woods yet. And so I think you may need to see some realizations on that, but that is to come. That's as we get some evidence on what reopening actually looks like.
Hey, Matthew, thanks so much for joining us. I really appreciate your thoughts and comments there. Matthew Luzetti, Deutsche Bank chief U.S. economist, giving us some thoughts on the New York Fed President Williams interview with Bloomberg Television just earlier, and just kind of economic outlook in general. And I guess the word of the morning, Lisa, continues to be uncertainty on the medical side and uncertainty on kind of the financial side, as well as markets try to discount various scenarios.
Yeah, and I should just point out that right now what we're seeing is also uncertainty when it comes to the political backdrop. The NASDAQ is now more deeply negative, down 1%. Even as we see the S&P and Dow eke out gains, and this comes after President Trump threatened the social media websites, in particular Twitter, as a result of a disclaimer on one of his tweets, giving a sort of fact check. And this sort of raises the specter of how much ire there will be, pressure on some of the behemoths that have performed the best on a regulatory standpoint heading toward the election.
Yeah, that's a great point, because you remember coming into this pandemic, one of the concerns about big tech was regulatory risk, and that seems to have kind of been kind of pushed to the background as the world focuses exclusively on this pandemic here. But kind of the president's tweets about potentially regulating some of those big tech companies kind of brings that back a little bit to the fore. And as Lisa pointed out, the NASDAQ is trading off about about 0.9% here while the others are trading up. We'll have more on that going forward for the remainder of the morning. For Lisa Abramowitz, Paul Sweeney sitting in for Tom Keene. This is Bloomberg Surveillance.
President of the Jewish Communal Fund, Zoya Rain.
TSB believe in people helping people. So if for whatever reason you become an innocent victim of fraud, they will refund every penny you lost from your TSB account. Find out more about their fraud refund guarantee at tsb.co.uk. Terms and conditions apply.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
I've used my ample time indoors to hunt down my odd socks. I found one down the sofa, one in the bread bin, and one in a serious relationship with my cat. But there are better ways to spend your time. That's why Money Supermarket is helping you find cheaper insurance, better interest rates, and easier ways to manage your bills. You can find many more small steps towards money care at Money Supermarket.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Introducing a new podcast, ESPN Daily, hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. The best sports story all day, 20 minutes a day, 5 days a week. ESPN Daily.
Search ESPN Daily to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
At Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Will technology lead us out of this crisis?
The worst jobs market, potentially in history.
The Fed seems to have really flexed its muscles.
How quickly can we recover from this?
Breaking market news and insight from Bloomberg experts.
To wring out that buy-the-dip mentality, that takes time. Are we looking at a more damaging break in the labor market? Does the shape of the yield curve matter? We're looking at late 2021, early 2022. Where it really feels quote-unquote normal.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up on Bloomberg Markets, we're going to talk about hope versus reality. What are we seeing in terms of the FOMO rally, the fear of missing out or fear of having missed out? Plus, we're going to take a look at some of the issues around social media that are driving some of the big tech names lower today. Right now, though, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Lisa, stocks are up again. This is day number 3. Optimism is mounting. The global economy is on the rebound from the pandemic hit. Treasuries have slipped. Meanwhile, Lori Calvasina, RBC Capital Markets, tells Bloomberg frustrated investors who missed out on the recent equities rally may have done so because of the types of stocks they saw.
Really distressed parts of the market that tend to work in these recovery trades. It's low-quality companies by any measure that you can pick. And I think the frustration I sense from talking to investors, it's not just that the market's ripping and they might not be there. A lot of people I talk to, they did try to get positioned for a recovery, but it's just not the kind of stuff that they want to be in long-term that's doing well right now, and that creates an additional layer of frustration.
We check the markets every 15 minutes throughout the trading day. S&P's up 0.1%, up 3. The Dow's up 0.75%, up 190, and the Nasdaq is down over 1%, down 101. The 10-year right now is up 5/32. The yield is 0.68%. West Texas Intermediate crude oil is down 3.7% at 33.10 per barrel. COMEX gold is down 1.2% at 1707.50 an ounce. The dollar-yen stands at 107.76. The euro, $1.0988. And the British pound, $1.2255. Now that's a Bloomberg Business Flash. I'm Greg Jarrett. Bloomberg Markets is underway now with Lisa Abramowitz and Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that data check there. Again, as Greg was just reporting, a mixed market with the Dow and the S&P up slightly, but NASDAQ off about 1% here. Let's get a sense of where the action is under the hood in the equity markets. We welcome Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at?
Well, I'll tell you, Paul, one thing that jumps out is you really saw the travel-related shares going to take off in early trading, and they're really pulling back. They're solidly higher, but still, you're not seeing the 10% plus gains in the likes of American Airlines or Carnival that you saw in early trading. So, some of the speculation about where those industries are headed as the U.S. and other countries ease their coronavirus-related lockdowns, that's certainly something to watch on the radar. If you look at the main industry groups in the S&P 500, the 11 main ones, it's sort of an odd kind of a mix, too. You're seeing financial shares at the forefront of the gains and some pretty solid advances among the biggest U.S. banks. Citigroup, Wells Fargo, notable on that score, up about 5% each. But then it's not necessarily all the sort of economically sensitive areas of the market doing well. The consumer discretionary category, which is retailers and automakers and home builders, is actually down today a touch. And then on the other hand, you see sort of the interest rate sensitive areas of the market higher, utilities and real estate. So it's not like there's kind of an obvious theme that emerges from early trading, as you often see, even after just a little more than half an hour of exchange trading here.
So let's talk Twitter. Twitter shares are lower by 3.25%. Why is that, Dave?
Well, it's interesting to have the president come out and, complain about the social media and how they're stifling conservatives, and yet he does it in a tweet. So that kind of says something right there. But, probably as much as anything, just the idea that, these services do kind of exist at the mercy of the government to some extent. So, there's a real question of how much Trump can do. He talks about, shut them down. Well, there is such a thing as free speech in this country, even though it may not be exactly, how he kind of lines things up. That said, the idea that you may get more government regulation of the industry, that sort of thing, definitely has kind of been out there as a potential roadblock, whether you're talking about Twitter or Facebook or, other companies in that area. So, the idea that this is kind of a flashpoint now, you can understand why Twitter's taking a bit of a hit here.
Dave, you mentioned kind of this earlier, some of the travel stocks, the airlines, and so on and so forth. When you hear from these companies, do they expect, I guess the question is, what is the expectation for getting back to reasonably normal levels of, I don't know, booking flights or cruises or vacations? Is there an expectation that this is going to snap back pretty quickly, or is this going to be a slow build for these companies?
Yeah, that really becomes the question, arguably more the slow build, because, you have to consider the cruise lines really aren't even sailing at this point for the most part and aren't likely to be for a couple of months yet. So, it's going to take time for the companies to rebuild their business. And that's why, you consider what they've been doing in terms of raising money, mostly through the bond market, though there have been some share sales as well. I mean, they're just trying to set themselves up so they can survive the next few months. And then as their business starts to pick up, things get better. But it's not looking like at this point, from what I've seen, that you get, what people talk about with the economy, a V-shaped recovery by any means for the industry.
The other issue that's been kind of pressuring the markets recently has been increasing tensions between the U.S. and China, and the rhetoric heating up even further. Vince Signorella, our macro strategist over at Squawk at Bloomberg, pointed out this story in the South China Morning Post saying this is part of the pivot in markets that we saw just a bit ago, that China vows to hit back at the United States over any action on Hong Kong on that national security law that the National People's Congress of China will be voting on tomorrow. I'm struggling to understand why markets aren't counting this more. It seems as though there is the beginning of it. Dave, do you have a sense of which sectors, which stocks we should be looking at or observing some action in currently that highlight how people are pricing in the risk of rising tensions here?
Well, one that jumps out is the chip makers, if only because they've really been caught in the back and forth between the U.S. and China. And actually, they're holding up pretty well. You look at the Philadelphia Semiconductor Index, sure, it's down today, but, we're not talking about all that much of a decline, just 0.5%. And the index has been recovering rather steadily from the lows of March. So, you look at where it's been. I mean, it's up more than 40%. So you have to figure that at the very least, I mean, it's something that people are paying attention to, and maybe it gets in the way of these stocks moving higher. But it's not like, people are really kind of thinking, things are going to get worse, and, these companies are going to get really caught in the crossfire again. So, that's a group to watch for sure.
Yeah, I was surprised that we didn't see more action on the semiconductors. So, Paul.
Yes.
Dave, is it that time?
I think it's that time of day.
All right. Well, I was going to tell a time traveling joke, but you guys didn't like it. All right. Moving right along. The dad joke of the day is, what happens when an artist has trouble finding inspiration?
What happens?
She draws a blank.
That's a good one.
Bad.
I like that. That's a classic dad joke. I think.
I would say so.
It's there right in front of you, but you just didn't see it.
Building on it. There you go.
That's
wow,
right.
Wow. Well, if you want to submit your dad jokes, since we've lowered the bar today, at least I have, you can email me at LaBromowitz@Bloomberg.net, or you can tweet it out at Lisa Abramowitz1. I always get confused. LaBromowitz, Lisa Abramowitz1.
There's a lot going on there.
It's too much. Yeah. Coming up, we've got a lot of great conversations.
Yep.
Dave Wilson, Bloomberg Stocks editor, thank you so much for being with us. Paul, what's catching your eye today? Is there
I'm just
anything
looking
in the media world?
It's interesting. We're going to have Bob Chapek, the new CEO of Disney, is going to be speaking with Bloomberg's Candy Chang at 11:30 Wall Street time, talking about opening up the parks in Florida and elsewhere across the globe. A really, really going to be important interview as this company tries to get restarted again on the backside of the pandemic. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have?
Well, Paul, as the U.S. edges closer to 100,000 coronavirus deaths, the country's top infectious diseases expert says he is cautiously optimistic about the prospects for a vaccine.
We have a good chance, if all the things fall in the right place, that we might have a vaccine that would be deployable by the end of the year.
Dr. Anthony Fauci tells CNN we don't have to accept a second wave of infection as inevitable. Still, he says instances that appear to show a lack of social distancing, like last weekend's crowded pool party in Missouri, are very troubling. President Trump is stoking his fight with social media in a pair of tweets this morning. He threatened to regulate or shut down platforms that, as he puts it, totally silence conservative voices. The president didn't say which ones, but Twitter posted a fact check on one of his tweets for the first time yesterday. It was about mail-in balloting. Presumptive Democratic nominee Joe Biden was asked about it.
No, I think they should. I think they should say when things are patently not true, they should say so.
Biden spoke to CNN in his first face-to-face interview since the pandemic took him off the campaign trail. Protesters were back on the streets of Hong Kong in their first major show of force since the pandemic. Police arrested more than 300 people after firing pepper spray in the central part of the city. The White House is considering a range of sanctions on China over its plans for a national security law for Hong Kong. Separately, the House votes today on sanctions regarding China's treatment of its Muslim minority. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republicans.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
COVID-19.
Get your cook on with Asda, with rollbacks on our 227-gram Butcher's Selection sirloin steak was £3.55, now only £2.85, and our 255-gram Butcher's Selection rump steak was £3.55, now just £2.75. Have a sizzling steak night. Thousands more rollbacks across the store. Asda. Selected stores subject to availability.
We're all in uncharted territory looking for ways to support our communities. At Dell Technologies, we're making sure small businesses have the right tech solutions. Dell Technologies advisors are here for you, helping small businesses stay connected and productive while working remotely with Windows 10 Pro and Microsoft Teams. We're standing by you every step of the way. Call us today on 0800 169 1745. That's 0800 169 1745.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Are you ready for the realest first-hand take of what's happening in the NBA? On their podcast, All the Smoke, former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing. My friend, our brother, Vince Carter, man, welcome to the show.
Yo, what's up, man?
What's up, my brother?
Man, I'm good.
Search All the Smoke on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks turned mixed amid signs the global economy is on the rebound from the pandemic hit, with investors shying away from high-flying tech shares in favor of equities most beaten down by the virus. We check the markets every 15 minutes. The S&P is now up 0.4%, up 13. The Dow's up 1.1%, up 288, and the Nasdaq is down 0.6%, down 56. The 10-year is up 7/32 with a yield of 0.67%. West Texas Intermediate crude is down 2.7% at $33.42 a barrel, with COMEX gold down 0.8% at $17.1380 an ounce. The dollar yen 107.76. The euro's $1.1014, and the British pound $1.2270. General Electric cut one of the last remaining links to founder Thomas Edison as the beleaguered manufacturer wrapped up a 3-year process to sell its iconic light bulb business. Automation products company Savant Systems will acquire GE